Casey, when we start thinking about Apple, though, I mean, should we start thinking about other ways? Apple should innovate its business. Let's say maybe a subscription for its phone, and as a way to sell services as opposed to actually selling the phone. I mean, there are a lot of analysts out there who say Apple's business model should evolve.
Yeah, and we've seen them introduce a bundle of services.
Welcome, guys. Welcome to the stream. I'll be streaming the FOMC meeting results here live. It should be coming up within the next 30 minutes. So let's just stay intact. Let's see what the markets are doing here and take a look. Right now, if we look at the S&P 500, we see them highly elevated here, still holding on over here almost at all-time highs at 406. If we take a look at the Qs also not at all-time highs, but in a nice bullish rally here, holding strong at 331. So it's going to be interesting to see what we get here in 30 minutes. There's pretty much nothing they can surprise us with or say. Let's just see Jerome Powell's tone and see what he has to say. Daniel, welcome, Daniel, to the stream. You short CCIV? I hope it's working out for you. It's had a nice pullback today for those who shorted CCIV. Let's see here. It's at 23. If you look at the dailies, it's not much of a pullback here, but still holding at 23.22. And we're going to wait and see what we get here in a few minutes. See some of the price action. See if the market starts selling off after the meeting. Oh, it's going to be very interesting. Let me look here at the SPAC ETF. SPAC's not doing so well right now. SPACs are not well. So we can see the chop here, and now we have a red day here. Oh, this is Virgin Galactic, actually. Let me see here. It didn't give me this. There we go. This is a SPAC ETF. It's very similar. So it'll be a few minutes. Let's take a look at the news for now, and then I'll be right back after we get some commercials.
These startups were out there, and the banks were terrified that suddenly they were going to get taken out. What happened to most of those startups? They all got bought out for the most part. Plaid's still standing. Most of the others got bought out. And if you read that Jamie Dimon letter, which, by the way, is absolutely stunning, big think letter, really impressive. He specifically said, we have money to make acquisitions, yes, and we are specifically looking at acquisitions in the fintech area. So nobody, JP Morgan is not going to go under to competition, even against people like Plaid.
Yeah, I understand that the acquisitions may be coming, but they're still going to be the ones that are standing, and maybe ones like a Square, whose stock price has really astronomically gone up in recent years. Casey, how do you think about acquisitions and who might be right for an acquisition by a big bank like a JP Morgan?
Well, I think, there are any number of companies that some of these banks would like to buy. Square, Stripe. I mean, I'm sure that banks would be salivating at that prospect. But increasingly, we're seeing these independents show real backbone. They want to be in it for the long haul. I actually think Plaid now faces a tough challenge. They just tried to cash out. They couldn't. And now they have to go do the whole thing independently. So I actually think this is maybe going to give them a harder road than they would have had if that acquisition had actually gone through, even if now maybe they stand to make a little bit more money.
What's the thinking, Kate, amongst VCs, private equity folks, in terms of fintech and where the roll-up happens? I mean, obviously, big banks want to buy these companies, but could a Square, for instance, go out and buy a bunch of companies? Is there a roll-up within fintech to happen?
We're seeing a little bit of that. Like Casey mentioned, some of these guys have a harder road. An IPO, while the market's pretty hot, and some of these companies like Coinbase listing next week, the market is ripe for these guys. So they've gotten a ton of sort of follow-on funding. If you think of a company like Robinhood, a lot of the investors have doubled down, put even more money into these companies because of this sort of digital trend and that wave. We're seeing a little bit of roll-up, but if you think about the antitrust issue, if they're looking at a Visa, Visa's probably going to have a tough time buying a smaller startup. And those were really the guys who were going to go in and buy. So you wonder if JP Morgan and Jamie Dimon will have an easy time, looking at one of these smaller competitors and potentially running into new antitrust issues.
Good point there. All right, this is our last story, I think. This one is for New Yorkers traveling to New Jersey to play sports bet. News here. New York State has approved a budget for its fiscal 2022 that would allow legal online and mobile wagering in the state for the first time. And while New York will be the country's most populous state to offer online betting, investors don't look to be thrilled. DraftKings, Penn National, Caesars, and MGM are all in the red. Bob, at the same time, there was an expectation that eventually this would happen. The stocks have seen amazing run-ups, like a DraftKings, which is up just this year 34%, up in the past 12 months more than 300%. So how do you interpret this?
Well, do you see what Cuomo said? He said, number one, I don't want the casinos running this. That was, I don't know about a surprise. Maybe it makes sense from Cuomo's point of view. Cuomo's point of view is, why should we give all this money to the casinos to let them do it? Let's let the state run it. Let's have the lottery system run it in New York. I don't know how I feel about that, frankly. I tend to think that having casinos run it would certainly be more dynamic and more interesting for sports bettors. From Cuomo's point of view, his attitude is, why should I give money to the casinos? I think they're setting up for a real fight here about the future of gaming. It seems like they're in the minority. Most other places, that's not the model they're using.
It does seem strange that the state would want to run an operation like that, Casey, just so that the money, I mean, it costs money to run that operation as well. You don't want to give the money away, but at the same time, do you want to spend the money to create a product that already exists in the marketplace in order to make some money?
Yeah, sure. I mean, to me, this just seems like a good old-fashioned case of a governor wanting to maximize the amount of control they have over something, right? You'd rather sort of have that, under your own purview than give it away to some private enterprise. And, I'm sure the governor is betting that if this plan proceeds, that he will be able to earn more for the state than through this alternative system.
Yeah. Kate, your thoughts on this? I don't know if you're a bettor. You don't strike me as one, but you never know.
I'm not much of a bettor. And it feels like there's other outlets for people. This seems like New York is catching up to what people expected. It was priced in for a lot of these stocks. But there's a lot of other outlets for people to spend their money, speculate, whether it's stocks or NFTs. So we'll see how much of a windfall this is for New York State.
Yeah, and you got to wonder, once people start being able to get out, if they want to spend as much time on a screen doing whatever, whether it be investing in stocks to betting on sports. Finally here, this is the last story. Guess who's joining the NFT craze? 7-time Super Bowl champion Tom Brady. The Tampa Bay Buccaneers QB is launching an NFT platform called Autograph this spring. The company will connect big-name celebrities with creators to develop digital collectibles. And, of course, Autograph will also produce Brady non-fungible tokens. Who doesn't have an NFT product? I mean, Casey, come on. This is like, it makes my eyes glaze over when I read about a celebrity with an NFT. Who cares?
I'm in the same boat. And yet, when you look at the success that NBA Top Shot has had over the past few weeks, it's only natural that the big stars of the other sports are going to want to get in on the action. So I do expect that at least for the next 3 to 6 months, you're going to see people taking a crack at this, seeing if the NFT craze continues apace. And look, I think that the Tom Brady, selling digital collectibles is not a bad bet at all.
Bob, I know you enjoy hard asset collectibles yourself, given the shots from your house with all the posters, et cetera.
I collect old 60s rock posters, and I collected comic books many decades ago. So this makes a lot of sense to me. The memorabilia business in general has been centralizing for many, many years, the physical memorabilia business. There's now central depositories for comic book auctions, for sports auctions, owned by several big houses at this point. So why not centralize NFTs? It seems a little early. I would note that physical collectibles are doing really well, including baseball cards, comic books. The first Superman just sold for $3.25 million yesterday. $3.25. We might say, what idiot's going to buy a comic book for $3 million? But it's the first Superman. It's 1938. Somebody did. Mm-hmm. So physical memorabilia is doing very fine.
Yeah, and Kate, I would imagine that there's a lot of salivating going on in terms of the possibilities for NFT as a market, in terms of companies that may deal with NFT trading. There's now talk that, you can use NFTs to own a slice of something. So to sort of stock marketify some of these hard asset collectibles into NFT form, that seems to be the potential next step.
That's right. A lot of these investors are looking at sort of where the digital economy is going and saying, okay, if people are living their lives online, If you think of Roblox and some of the gaming companies, and people are spending their money online, why not have digital collectibles and assets that you can buy? There's some examples of people buying real estate in video games and spending a fortune on things like that. So I think that is sort of the next step here, as people, for better or worse, are spending so much time online. But like you mentioned earlier, will people actually want to be sitting in front of their screens a year from now, and they do have the opportunity to go out more? But yeah, the real estate thing is mind-blowing, that you would want to buy a chunk of space in a digital world. It's just, this metaverse thing is fascinating.
Well, that's because you can also charge for advertising on your space by putting up digital billboards, etc. There's a way to monetize that investment. We had a whole segment on Fast Money about real estate in the metaverse, so it is fascinating. Thanks, guys, for a great conversation. Bob Pisani, Kate Rooney, and Casey Newton. All right, President Biden set to deliver remarks on his American jobs plan, what the message will be, and why the very definition of infrastructure is becoming a partisan issue. Plus, more from Jamie Dimon's letter, including his take on how China sees America. Is America playing catch up to China? We'll explore that. The Exchange will be right back.
All right, welcome guys to the stream. We're still 15 minutes away. I just was looking over some articles here on Bloomberg. So this is a new SoftBank BlackRock-led $640 million funding for startup Trax. I don't think this is a SPAC. I think this is just an investment opportunity for a joint collaboration between SoftBank and BlackRock. So I started looking into it. So Singapore has been getting a lot of attention, along with what was the other? It was Singapore and where Tokopedia is from. So Southeast Asian countries are getting a lot of attention, emerging markets, for some nice possible deals here in the future. Trax is a Singapore-based startup serving the retail industry, raised $640 million from investors led by SoftBank Vision Fund 2 and BlackRock Inc. to bankroll its global expansion. New investors in the Series E financing include Ontario Municipal Employees Retirement System, one of Canada's largest pension funds known as OMERS, as well as Sony Innovation Fund by IGV. The startup said in a statement the round valued tax at more than $3 billion, according to the people familiar with the matter, who asked not to be named because the information is private. So I just looked up the Trax here slightly. Trax is image recognition, provides in-store execution solutions. The company offers image recognition technologies for retail sectors. Trax image recognition serves customers worldwide. So I went to their website. Let's go to their homepage just to take a look here while we're in commercials. Rebirth of retail made possible with Trax. Trax enables brands and retailers to better navigate the new frontier of retail, where the best of physical and digital come together to delight at the shelf. So I guess it gives you it scans the shelves here, which is pretty cool. It's I guess you can see here a little autonomous robot here scanning the shelves, and I guess it gives you some sort of inventory, smart action at speed and scale. Digitalized shelves delight shoppers. So maybe it gives shoppers an app where they can see the shelves and see what products are there, maybe an inventory. This is something totally new. I've never seen this before. And I guess it's a new way of tracking inventory. So let's see the technology here. I thought this was pretty cool. Let me see here. We have time for this video. Okay, we'll take a look at it in next commercials. Let's see what's going on. I want to see this video.
Plan would actually detract from U.S. growth, which is a fact that Republicans are seizing on in addition to the scope of the package. Take a look at what comprises the American Jobs Plan. About half of the $2 trillion price tag contributes to physical infrastructure that gets traditionally funded by Congress each year. Add in broadband, power grids, and water pipes to that as well. But on the flip side, the biggest single line item goes toward elder care. And then somewhere in the middle are projects to rehab schools, housing, and federal facilities, as well as invest in manufacturing. Today, the Commerce Secretary joined the White House press briefing to say that business is on board, that all of that is needed, and she urged Republicans to come to the table to negotiate.
Every single business leader I've talked to applauds the fact that this package is more than just roads, bridges, and water. Like, Come on, 35% of Americans in rural areas don't have broadband. You cannot have a modern economy without that. We have a crisis in semiconductor manufacturing. You cannot have a modern economy without that.
She said that Republicans should be willing to negotiate but not come to the table with a fraction of what the administration is proposing, Melissa. But as the White House and as these officials talk about the broad and loose definition of infrastructure, it's becoming memeable in its own right. And so the definition of infrastructure is going to be debated as the administration tries to argue that it should begin with a lowercase I and encapsulate a whole host of things here.
Yeah, Kayla, JP Morgan CEO Jamie Dimon today weighing in on America's race with China, including on infrastructure, saying, quote, the Chinese see in America that is losing ground in technology, infrastructure, and education, a nation torn and crippled by politics, as well as racial and income inequality, and a country unable to coordinate government policies. And to give you an idea, here's what China's spending plans are on that front. $1.4 trillion for 5G and digital infrastructure through 2025, $120 billion on railroad investments through 2020, and building more than 160 airports in the next 15 years. So, Kayla, how does this compare to the U.S., and does that factor into the president's plan?
Well, the China spending outpaces and eclipses that of the U.S. But of course, Melissa, they micromanage their economy and they handle these things very differently than the U.S. handles them. Here, the administration is acutely aware of China as the 800-pound gorilla on the world stage. President Biden has said that China is eating the U.S.'s lunch on infrastructure, and the transportation secretary has said that China is stepping into a leadership role that the U.S. ceded decades ago, and that the U.S. needs to step back into that. And there is bipartisan agreement that the China threat needs to be neutralized and soon, but the disagreement is in how to neutralize that threat. The White House hopes that the insertion of certain provisions in this plan, like $600 billion to rehab manufacturing and supply chains, will bring bipartisan support, will secure some of those votes for this package. But it actually might end up doing the opposite, because many Republicans, even though they support those initiatives, they say that issue is large enough on its own that it needs to be dealt with on a standalone basis and not as part of this multi-trillion-dollar package. And then there is just the amount of money that is going toward infrastructure itself, and that if the goal is to meet China in a tit-for-tat way and build a high-speed rails and high-tech airports, then perhaps this is not the moonshot type funding that will actually get that. If you take a look at this comparison, the last time the U.S. did a multi-year surface transportation bill, it averaged out to about $61 billion a year. By comparison, the $621 billion in this package averages out to about $77 billion over 8 years. That's just about a 26% increase. So on an apples-to-apples basis, Melissa, it's not that much bigger than what the U.S. has done in the past. And so if it is about meeting China eye to eye on transportation, then Republicans argue even that would need to be structured differently.
The cost, though, of course, brings up the notion of raising taxes to pay for this whole package. And it sounds like the Commerce Secretary has already sort of backed down, if you will, on the proposal for a 28% corporate tax rate.
She was asked specifically about questions raised by West Virginia moderate Democrat Joe Manchin, where he said he would be able to support a 25% rate, not 28%. She said that would be open to negotiation and wouldn't go any further. Certainly, the administration's position has been that this package is readily negotiable. Every part of it is. So we'll see where that ends up.
All right. Kayla, thank you. Kayla Tausche. Still ahead, we'll have more from Piper Sandler's biannual teen survey. And by the way, food is hot. The names to buy to cash in on the teen spending trends. Next.
All right, let's take a look at this video.
Trax, we have a single purpose: to digitize every product in every aisle to unlock the potential of every shelf. We'll take you under the hood to learn more about our breakthrough computer vision platform, where we've developed the world's largest retail image repository that fuels our engines, and our patented deep learning algorithms for retail. We begin by ensuring the completeness of the captured self-images, utilizing an unsupervised learning engine that actively monitors for any data anomalies. We apply advanced image processing techniques to fine-tune every image taken. A unique panoramic stitching engine pieces together the in-store images into a single reference frame to digitally represent the actual full store shelf. And with our fine-grained recognition and geometry engines, we identify every single SKU on the shelf and transform them into granular shelf insights. What's more, our active learning engines automatically recognize new products and displays as they appear on shelves, so our database stays up to date. To meet the highest recognition standards and engine performance, samples of shelf images undergo a voting process for validation. Trax uses a cascade of state-of-the-art engines working in parallel to turn shelf images into actionable insights in a matter of minutes. Powering industry-leading retail solutions to drive efficiency, effectiveness, and revenues for the world's largest brands and retailers at global scale.
All right, that looks pretty freaking cool. So that's Trax. That's SoftBank and BlackRock collaboration to fund the Singaporean company. So they surpassed a $3 billion, I guess, valuation after the funding. So that's amazing. I mean, I haven't even seen that kind of technology here in the U.S. That's awesome that they're simplifying the process. We can see automation, and we can see tech really pushing forward. So, according to Kathy Wood, tech and innovation is the future. And you can see here, it's going to replace a lot of jobs and it's going to be the future. So the future, the world of it's going to look a lot more tech heavy. I see a lot of computer programmers and engineers leading the way here, and a lot less labor intensive jobs being available in the future. So that was pretty cool. I like that company. Let's see what they have to say.
Biannual teen survey, and one area where teens spend big is food. Kate Rogers joins us now with a look at which brands take the top spot. Hey, Kate.
Hey, Melissa. Well, we all know teens love their food. Piper Sandler is out today with its latest Taking Stock with Teens spring report, surveying 7,000 teens nationwide with an average age of 16.1 years old. No surprise here, food is teens' #1 priority overall for the wallet at 23% of wallet share. For males, it's the top priority. For females, it's #2 behind only clothing and accessories. The top brands for both upper income and average income teens are Chick-fil-A, Starbucks, and Chipotle. The survey says that Chipotle is holding steady with brand scores and gaining a lot of traction with average income teens. That could be thanks in part to its marketing awareness campaigns on places like TikTok, its merchandise lines, and more. Starbucks is the most preferred coffee company, but its mind share is muted from prior highs. Piper Sandler says its brand equity is relevant social currency among Gen Z. McDonald's is still in the top 5 brands for both upper and average income teens, but its mind share also dipped. This could shift, though, as the company has leaned into digital engagement and, of course, has those celebrity partnerships with Travis Scott and J Balvin. Overall, teens overwhelmingly prefer limited service brands to full service brands that offer social experience but also have that affordability factor. Teens are also a part of the reopening trade. 69% of them plan to take the vaccine. That's up from 64% in the fall. 81%, Melissa, say they plan to dine in. That's up from 77% in the fall. Piper Sandler projects that restaurant spending is going to rebound as both mobility and spending patterns return to normal. Back over to you.
Kate, you know what's interesting is Chick-fil-A is a top spot, and a lot of these brands spend a lot of money marketing to these teens, but Chick-fil-A does not. So how did that all happen?
You know, Chick-fil-A has a lot of brand awareness. The chicken is really, really popular. They'll get into, these little tips here and there on Twitter. They do market, but they don't do these big celebrity partnerships like we see from McDonald's or these TikTok viral campaigns like we see from Chipotle. Big shift from when I was a teen. We used to hang out at Chili's. It was all about casual dining. All these quick service and fast food companies are really, really hot right now.
All right, Kate, thanks. Kate Rogers.
Thanks.
All right, that does it for us here on The Exchange. Coming up on Power Lunch, with more corporations responding to Georgia's new voting law, Brad Raffensperger, Georgia's Secretary of State, will join to discuss the fallout. Power Lunch starts right after this quick break.
If you're looking for a different...
Okay, we're back to commercials. If you guys want me to check out some ticker symbols, put them on the chat. I'll take a look and we can talk about some of these. Right now, I actually have a position on Wish that I'm swing trading here. I had bought at 1560 a few days ago. I bought some more today at 1450, and it's holding here, waiting for the Fed minutes. It had a massive down day today on Wish. This pretty much looks like a SPAC to me, but this was a traditional IPO, and the Wish Financials is a very profitable company. So I like this for a nice little swing trade here. I'm trying to make some moves here. Let's see what happens. Let's see if we see an end of the day reversal after we get some Fed minute news. Can I take a look at Palantir? Yes, let's take a look at Palantir. So Palantir has an event in 2 weeks, and you can potentially do a play here on Palantir. Here we go, PLTR. Let's take a look at the dailies. So dailies is hovering around $23. So Palantir is having an event on the 14th, which is 2 weeks, which is next Friday. Let's take a look at the calendar here. Oh, literally 1 week from today. So Palantir is having, we could see a nice surge here on Palantir, depending on the Fed minutes, depending on the news that comes out right now, depending on the Fed minutes. We have a short-term catalyst. I like Palantir for a trade. I like it for long-term, but for long-term, I mean, we're talking about years. But if you're looking for a trade in the short-term on Palantir, it hasn't really done much since the announcement of their event on Friday. Palantir. Let's take a look of the event. Palantir won government contracts, but this analyst isn't happy. So this is new to me. I didn't know that they did this. This was from 2 hours. So Palantir apologizes. Oh no, polarizing. Let's see here. Wall Street electing a review analyst. Community. Its latest contract win has done little to convince William Potter. It's just an analyst giving his overall point of view. But you can definitely do a trade here with Palantir, buy some shares, and possibly sell it on Monday or Tuesday. Okay, Fed minutes.
What were they thinking at their last meeting? What were they thinking? Steve Leisman is digging through that, and Georgia is on everyone's mind, it seems. The backlash is coming from both sides, and businesses are caught in the middle over that new voting law. And two heavy hitters teaming up. Rick Caruso partnering with the Winklevoss twins. Caruso will now accept rent payments and more in Bitcoin. He'll join us along with Tyler Winklevoss. Frank.
Hey, thank you, Tyler. Let's check the markets as we await details from those Fed minutes. Now, you might think today is kind of a quiet day based on these numbers, but there's always action somewhere. And today it's in those big mega cap tech names that you probably already own. We're talking Google, Facebook, and Microsoft all hitting all-time highs today. Let's bring in our Bob Pisani with much more on what's working today. And Bob, what isn't?
Well, Frank, you're right. Things are kind of flattish this week. The S&P is flat, but that's good news. Remember, things have been going great. The reopening is proceeding. The vaccine rollout is really strong. So it's certainly good news to move sideways because we're at record highs. Everything has been rotating through really nicely. You mentioned the tech stocks still have leadership overall. So I'm not at all concerned that we're flattish this week. One thing I would note, remember, people love trading these thematic tech ETFs, these solar ETFs and clean energy and 3D printing, cybersecurity ETFs. People love investing in that style. These all topped out a month or so ago, and they've been showing some signs of weakness in the last few days. I think the prices are very, very high on these kinds of thematic tech ETFs right now. Not surprising they're pausing a little bit here. The reopening stocks have had runs up and then runs down. They're a little bit weaker today, but I wouldn't say that much. You see some of the hotels, some of the airlines a bit on the downside. But again, they've had a pretty good run, particularly in the last 2 weeks. Finally, I just note some of these industrials and big consumer names. They've had great runs, too. So some of them are stay-at-home stocks to a certain extent, like Sherwin-Williams and Whirlpool. They've had great runs. They're a little bit weaker. So, guys, the key story right now is going to be guidance for next week. Remember, they want more guidance. We don't have any visibility. We can't tell you what's going on. Forget about it. That's 2020. Nobody wants to hear that. Prices are too high. They want to hear the CEOs giving some guidance about how business is going to be in the second, third, and fourth quarter. No saying you can't have visibility. And people who say we don't have visibility, they're going to get a lot of pushback on that idea. The idea is CEOs give better guidance, then the analysts raise their estimates, and that helps support the stock prices. That's what the market's expecting. It's going to be a very interesting earnings season.
Yeah,
Guys,
it's a
back
very
to you.
interesting point, Bob, that no guidance last year. This year, you better give it. All right, let's go to the bond market now and see how treasuries are reacting to the minutes. We haven't heard the news from the minutes, Rick, just yet, but I'm sure some people in the market have already reacted.
Oh, absolutely. And the headlines are starting to come out. A couple of the headlines, and I'll stick with what I think is the big one. The big one is that the Fed, Bob was just talking about guidance. Well, if you're looking for guidance from the Fed, it's not going to have anything new because they're not going to recalibrate it very often. That seems to be one of the headlines coming out. What does that mean in English? It means they're sticking to their dovish storyline. And we heard from Chicago's Evans, it's going to take months and months and months before we really have a judgment on some of this. And other headlines coming out say it's going to be a long time in the economy before we see substantial progress. All of that sounds a whole lot different than many of the numbers we see every morning. Let's look at a chart of two-year note yields. You know, if you start them pre-COVID, the whole chart goes flatline from the beginning of 2020. But when you zoom this year, year to date, and this is important, even a two-year note, even the short maturities, closest tied to the Fed, are starting to turn higher. And if you look at a 10-year note yield, well, since the end of March, basically since the last meeting, we're sliding. And another commodity that's sliding is the dollar. Look at the dollar month to date. It's sliding as well. And I think one of the reasons is because one thing from the data is painting a strong picture. The Fed's painting a bit of a different picture, and many investors are a bit nervous. But at the end of the day, who wins? The market wins. Where's the Dow Jones Industrial Average? Trying to find direction today with the minutes coming out. But last I looked, it was still very close to 33,500. That's a dizzying height with regard to a price. Frank, back to you.
All right, Rick, we appreciate it. Now let's go over to our Steve Leisman for much more in the minutes. Steve, what do you got?
Just a couple of comments on the economy that came from the minutes. They said the pace of recovery had picked up recently, and that was again when they met in March. They saw encouraging developments regarding the pandemic, particularly the vaccinations, and the vaccination rate was something that buoyed their view. The release of pent-up demand, they said, could boost consumption down the road. Home sales were seen as robust. That may be an understatement given the actual data. The economy, though, this is important, was far from achieving the Fed's employment goals. And they said that changes to policy should be based on outcomes, not forecasts. That's the Federal Reserve really reiterating this idea that the Fed has gotten rid of this notion of preemption and moving ahead of time for fear of future inflation, wanting to see much more the whites of the eyes of inflation and actual decline or return to employment levels before the pandemic. I'll just take one more look at the headlines here, guys, and it looks like it pretty much sums it up. The Fed really standing pat for quite a while until it gets to where it wants to be, which is much lower unemployment, much more gain as to the lost jobs in the pandemic, and not signaling any near-term change in policy. Tyler?
All right, Steve, thank you very much. And stay with us for more reaction to the Fed minutes and to the impact on the market and the economy. Let's bring in Lindsay Piegza, chief economist at Stifel, and Laureen Gilbert, CEO of WealthWise Financial. Folks, welcome back. It's always good to see you both. Lindsay, let me start with you. It sounds to me like the Fed is much more concerned about employment than it is about inflation.
Well, right now it does seem like the Fed is focused on the labor market, and it's focused on the here and now, really acknowledging some of the improvements that we've seen in terms of payroll growth, a decline in the unemployment rate, but continuing to emphasize that the recovery is far from complete. Now, we did see a little bit of a discussion also in terms of the asymmetry of the labor market, meaning some of the harder hit sectors, some of the factions of the labor force that have been disproportionately impacted, maybe lagging behind that national improvement. So really emphasizing the Fed's new flexible and dynamic framework that they'll also be using when they judge whether or not we're back to this full employment level. So really looking at the labor market first and foremost. Inflation, as you mentioned, has been a secondary consideration as they really are viewing any sort of uptick costs as temporary or transitory. The focus right now is on the labor market.
I don't mean to be too judgmental here, Laureen, but it sounds like these minutes were something of a nothing burger. There's not much in there other than that, what Steve said earlier, and that is they're not going to move against inflation until they really, really, really see inflation.
Yes, and let's not forget that this is good news, that the Fed is being transparent, that it is the status quo, that the low rates are for longer, which will continue to be a boost in the economy and in the market. So all of this is additive and positive when it comes to our markets.
Hey, Lorraine, turning back over to you. A lot of talk about inflation, and we are expecting the March CPI to come up in a few days. But as of right now, inflation is only at 1.7% over the last year. I know you believe that the Fed's going to let it get as high as 2.4%. How do they do that and also address unemployment? Even Jay Powell said real unemployment is probably closer to 10%. And there's a lot of parts of our economy that are being left behind in this recovery. How can you do both?
Well, traditionally and historically, when we look at the Phillips curve, as there is increased economic activity, then we see more jobs that are created. All of that also leads to a higher level of inflation. So there could be a coupling. The Phillips curve doesn't always hold, but whether there's a coupling or not, there's a lot of reasons for inflation that are apart from employment numbers. So I would say that we do expect inflation numbers to continue to go up for a while, and that the Fed is much more concerned about unemployment than inflation numbers and want to see the labor participation market get back to a more sustainable long-term market for unemployment, where we have women, for instance, who are participating in that labor participation number.
Let me go back to Steve. You know, Steve, I don't mean to be snarky when I call it a bit of a nothing burger, because you always find fascinating details in these reports.
This is my life's work, Tyler.
I'm feeling guilty. I'm feeling bad. I'm feeling bad.
Thank you.
So find some little nuggets in there for us.
I am going to find you some nuggets. I'm going to find you some large nuggets, Tyler. Let me just give you a quick headline here. The first one that we should also add is that the Fed said it would take some time before there was substantial further progress. That's the three-word phrase that it uses to figure out or to signal when it's going to be reducing its asset purchases. But let's take a step back, guys. If you can put up the 2-year note for this grand point I'm going to make here. The big story here, Tyler, is the debate right now is whether or not the Fed does some interest rate hike in 2022 versus 2023. And I kept thinking about that debate. I deal with it every day, all day long. I'm like, wow, that's a long way off to be having that debate. And if you compare it, guys, if you were going to go back and do like a 10-year chart on that 2-year note, almost the whole time when Bernanke and Yellen tried to keep interest rates down and kept rates near zero during the great financial crisis and the aftermath, the market kept anticipating that rate hikes were coming. The big story, Tyler, is how Fed Chair Jay Powell and the Fed have convinced markets how patient it will be in raising rates. The 2-year note has barely changed after $1.9 trillion of stimulus passed by the Biden administration. Another $2.25 trillion to come. A jobs report in March that was 1 million jobs, if you include the revisions from February. This is the big story, and this is a big part, Tyler, in my opinion, of what underpins the stock market right now, this belief in patience. It's like Powell has convinced everybody to take the blue pill, and nobody really knows it. And that's a reference to from Matrix, if you haven't seen the movie.
Steve, I've seen the movie. That was a something burrito, Tyler.
Yeah.
That was a something burrito. He had something there.
there.
It's the man's life work. Take it easy. Switching gears, the Jamie Dimon letter. And Lindsay, I'm going to toss this over to you. Jamie Dimon, very bullish about the U.S. economy, the global economy even, and saying that those stimulus payments are a big reason why. Do you agree with Jamie Dimon on his bullish stance? And do you also feel like this deficit spending is okay as long as it leads us to a recovery?
I think what we've seen is that forecasts and expectations have been revised significantly higher as the virus has increasingly been controlled. Vaccinations have picked up speed, but predominantly because of the trillions of dollars in spending that has been already allocated into the economy, the trillions more that are expected to come down the pipeline. So essentially, to his point, we're creating this perfect equation for short-term robust growth. Essentially, you have businesses at this point very willing, very able to open and welcome back customers, and you have a consumer base, a stimulus-fueled consumer base, anxious and willing to go back out and continue to spend. So this certainly does create, again, the perfect equation for very robust growth near term. But we do have to consider the long run consequences when we're talking about a massive expansion of the government's balance sheet, which, while the Fed may not be concerned about inflation in the near term, in the longer run, there has to be inflationary implications that we do have to consider and that we should be concerned about.
Maureen, the president has said that he has not spoken to the Fed chair, I guess, since taking office. But that doesn't mean that the administration isn't coordinating with, in contact with the Fed, does it?
And I think that's what we've seen in the prior administration and now in this one is a coordination of efforts between Treasury and the Fed that we really hadn't had before. And in the last administration, it was much more vocal, much more public. In this administration, it's much more private in that it's more Yellen and Powell, in a sense, coming together. But I definitely see a shift and a change in this kind of policy, and we'll see where that leads us.
All right, folks, thank you very much. Lindsay Piegza, Laureen Gilbert, and Steve Leisman. Thank you.
Thank you.
Thank you.
All right, coming up here on Power Lunch, businesses in the state of Georgia put in a very difficult position. First threatened with boycotts for not opposing the voting law, now facing boycotts from the other side for supposedly caving in to the woke crowd. That's next on Power Lunch.
Wow. So again, not much of a news here. Fed is more interested in unemployment than inflation. They're expecting a 2% inflation, but like I explained in some of my previous videos, it's a double-edged sword. So higher inflation, they're eventually going to have to raise interest rates. So I don't know why they say they're expecting a 2% inflation, because at that point they raise interest rates, and at that moment markets will pull back. We see tech just right on a complete tear. If we take a look at Amazon reacting to the news, extremely bullish here on the daily. It's just going parabolic, trying to seek all-time highs. At this pace, we'll be there by the end of the week. Massive moves. It's up right now about 2% intraday. So big move there on Amazon. If we take a look at Apple getting some love as well. Apple right now, right here at 127, all-time highs at 146. I mean, if this momentum continues, it could very much so do a V-shaped recovery here. Well, this is more of a U-shape since we had some consolidation here. So we see big tech right now getting their turn. All of SPACs right now are getting hit. Let's take a look at CCIV. All of small caps and SPACs are getting hit right now, doing a whole nothing burger, just like they said in CNBC. We see here not really reacting. It's at 1236. Let's take a look at the 5-minute chart. Slightly trying to power back up. Today hit a high of 24.47. So it's down about $1.50, around $1. So CCIV not doing too well here. Let's take a look at Wish. This is one that I'm trading right now. Surprisingly, doing a whole lot of nothing, consolidating here at 14.50. I added to this position today, so just looking for a swing trade for a few days. Was waiting on this news. Although nothing really happened, I feel a little bit more comfortable now, because typically this kind of news, Fed news, you see some volatility and some wild swings before we see some direction. And all we got was tech reacting positively and rallying up, and SPACs doing a lot of nothing. So this is a good sign, because we could have gone lower on the SPAC side and high growth side of stocks. So yeah, I'm actually a little bit more at ease. So we'll probably can continue to see a steady uptrend. Right now, the money is definitely out of SPACs and high growth, but it's the time to load up. Although this looks attractive, I don't want to run after these companies. Let's see what they have to say.
Companies based and caught in the middle of a political fight right now. First, they faced boycotts for not opposing the state's voting law strongly enough. Now boycotts threatened from the other side for supposedly caving in. Seema Modi joins us now live from Atlanta with more details. Hi, Seema.
Hey, Tyler, and now a last-minute decision to postpone that boycott from local religious leaders. That boycott would have taken aim at some of the most powerful companies here in Atlanta, including Coca-Cola, Home Depot, among others. Now, while Georgia's voting law has invited strong opposition from companies, civil rights leaders, and politicians, we've been speaking to a number of residents here in Atlanta, some who rejected, others who actually support it.
I think you need to be able to show an ID to vote. You show an ID to get on an airplane. To me, it's just logical.
Focus has now turned to the Masters Tournament, Georgia's most celebrated sporting event. Earlier today, we heard from Augusta National Golf Club Chairman Fred Widley, who broke his silence and spoke out on the Georgia law.
I believe, as does everyone in our organization, that the right to vote is fundamental in our democratic society. No one should be disadvantaged in exercising that right.
But Widley facing criticism for not saying whether or not he supports the law. This after MLB pulling the All-Star game from Atlanta to Denver. Augusta and that Masters tournament teeing off tomorrow, guys. Back to you.
All right, Seema Modi in Atlanta. Thanks for that reporting. All right, joining us now is the Georgia Secretary of State, Brad Raffensperger. Secretary Raffensperger, you just heard Seema's report. Thank you for being here. Obviously, this controversy on the top of mind for many people.
Well, thank you for having me. I'm glad I have an opportunity to clear up the misunderstandings.
So, Secretary, in addition to being an elected official, you're also a business owner and you're an engineer. So you're in very many business circles there in Georgia and probably the Atlanta area as well. What are you hearing from corporate leaders and other business owners? Are you worried about the impact this is going to have on the business community long term?
Well, Georgia rolled out the Welcome Act for corporations to locate and expand their businesses in Georgia, probably back in the early 60s. Delta relocated from Birmingham years ago when it had an unstable political environment in Birmingham. And so we're just really excited that we have such great corporations in Georgia. Obviously, what I wish is that every business owner, before they make decisions, would actually read the bill. If you read the bill, it's not what's been represented there in the social media and also in the political narrative.
Secretary, in all fairness, I understand what you wish, but what are you hearing? I'm certain that you're hearing from a lot of other business owners, business leaders in your position, both with the state and also with your company.
Bill, I'm a small business owner. Most small business owners are busy figuring out how they're going to make ends meet in the middle of a pandemic. We are coming out of it, but still, it's been a tough year for many of us. And so that's what they're focused in on. As Secretary of State, I'm making sure that we have good laws. And I looked at SB 202. It has a lot of good provisions. One of those is, as that lead-in was, we now are going to go to driver's licenses identification. It's very objective. It's an objective measure instead of signature match, which was very subjective. So you ask people, what is your driver's license number? And that's how you get your absentee ballot. And I think that's a good way of moving forward.
And many other states have similar requirements for either in-person voting or for getting an absentee ballot using some kind of government ID. Of course, the counter argument there is that many, many, many more people in minority communities, in poor communities, do not have driver's licenses, do not know how to, or do not have the transportation to get to a place where they can easily secure some sort of state-issued ID. But you said you wanted to clear up some misunderstandings about this law. And so my question to you will be this. What are those misunderstandings, number one? And how, if at all, do you think this law is out of the mainstream of other states' voting laws?
Right now, we have photo ID for in-person voting. Now we will have photo ID using driver's licenses for absentee ballots. That shores up confidence in the system. We have now made it mandatory that every county in the entire state will have a minimum of 17 days of early voting, up from 16, and then 2 days optional of Sunday voting, which is now 19 days. And so that's a good thing. We've also made it a law that counties need to make sure that their lines are no longer than 1 hour. And so that's very important. And we've also now shortened the runoff period. Instead of being 2 months long, it'll be down to 1 month for all of our overseas military ballots. And that's a very good thing also.
Secretary, in all fairness, make sure that your line isn't an hour or longer. That is subjective. I think that might be counter arguments, which you were saying before about the IDs being objective. How do you make sure? What are the penalties? I think that's one of the things a lot of people are asking questions about. But back to your role as the Secretary of State. You also handle applications to start corporations and LLCs. So you have a lot of that data. Are you worried that this new law may lead to some companies and businesses leaving Georgia or deciding not to come there? In recent years, we've seen the culture of a community of businesses is more and more important. You look at Austin, Texas, or Boston, Massachusetts. Are you worried that people will start looking at Georgia as a town that they don't want to start a business in or don't want to move a corporate headquarters to?
New corporations filing are up in spite of a pandemic here in Georgia, so they're still strong, and we've seen no let up in the past week due to this controversy.
Well, I mean, I don't think you'd see that data in a week. Are you worried long term?
Well, I'm always going to be concerned about making sure we have a healthy business climate in Georgia, and I think we still do. This is an issue that got spun out of control. But if you really look at the bill, what it does, and read the bill, it's a very, and I don't want to say it hasn't really changed much. It's now switched from signature match to photo ID for absentee ballot. That is very objective. We've increased early voting. We have now made sure that.
Okay, I'm going to pause it there. Just redundant, a whole lot of nothing. Okay, let's talk about some money-making moves here. Okay, so I like gold. I actually bought gold. I'll go over gold first, and then I'll show you what I bought last week. And right now, gold is at a good level to buy. This is a swing trade. I don't think gold is something that I would buy some options right now in the short term. It moves very sporadic. I think long term it's set up to do a nice move to the upside. I mean, gold, no one's paying attention to gold. It's left behind, and I think the opportunity right now is in gold. But you have to be patient with this one. I've traded gold plenty of times, and I end up being impatient and then chasing after. And we take a look at the sentiment here. This is just some risk, basic market measures. And at gold, we see here the best buying opportunity in the short term. The short to long term, actually, this is just more of an overall indicator here. And the risk is low here, and it's showing green. So if we take a look at in comparison to stocks in the short term, it's neutral right now. In the medium term, it's a little heated. So the higher the number, the more bearish. The lower the number, the more bullish. So gold is definitely one to look at, especially with all this inflation talk. A lot of people are going to crypto. I think gold is another one where you can diversify and buy into. So I do like gold right now for the time being. So the one that I buy is KGC. I like KGC. It's not pulling up here. Give me 1 second. It's Kinross Gold or something. KGC. Here it is. Kinross Gold. So this is a gold stock here. It's $7.17. So when the pandemic hit, this stock was trading around $10. And we had a nice pullback here. We had a few potential rallies, but continued to fail once, twice, 3 times. So now I feel that with all this inflation talk, we are at a point where we can see this go back up to $10 by the end of the year. So I did buy this last week in my long-term investment portfolio. And this is the way I play gold. There's a lot of other ticker symbols. If you want to do a penny stock gold play here, I recommend MUX. This is a penny stock gold ticker symbol here, MUX. It's trading at $1. This also has options. So if that's something you want to do, this is one to look at. Let's see. Okay, so this is relatively an old stock here. They probably had some stock splits. I'm looking at the monthlies right now. But in 2011, it hit a high of $9.50. So we do see here, we do see some inflation coming in. We can see this move aggressively go up and 10x your money, depending how bad inflation goes or what happens in the next few months with interest rates. So we can see this shoot up easily to $9, if not more. So MUX is one. If you want to do an aggressive penny stock play on gold, I like I like Kinross a little bit better. It's a little bit bigger company. It's a little bit more stable. This is one that I buy and trade, so this is one that I like. And so overall, gold, I give it a thumbs up. But this is more of a like a back end play. This is a position that you have in the back end. It's a smaller position. It's not much. It's not a like a huge percentage of your portfolio. Allocating maybe 10, possibly 25% if you want to be really aggressive with gold into your portfolio. Just adding into it, and yeah, I would recommend KGC. Now, if you're a little bit more conservative, you can go with Barrick Gold. This is one that Warren Buffett bought, and Warren Buffett bought last year when the pandemic was at its peak, and he bought somewhere in the mid 20s, if I'm not mistaken. At least the news was released when it was in the mid 20s. I don't know what price he got, and you can see it hit a high of $31, and now we're below at $20. So this one also pays dividend. So if you want to do a long-term gold play, Barrick Gold, GOLD, looks amazing here at $20. So it looks pretty interesting. So that's my take on gold. If you guys want me to see some other ticker symbols, put them up on there. We can look right now. In the meantime, we can watch Palantir here. This is the event, and it's actually April 13. This event is happening April 13, Tuesday. Let's see. They're talking about DraftKings. Let's see what's going on.
New York approving online gaming. It sent shares higher, but DraftKings quickly gave up those gains as the details around the language of the law and when the rules could change, that remains vague. Next, Snapchat surging 6% today and more than 15% in a week. The company saying data from its self-serve ad manager platform shows a 6% increase in users last quarter. And finally, Dell Technologies rising today after Deutsche Bank called the company a top recovery idea for 2021, saying in part that IT spending will continue to recover over the next 8 months.
And ahead on Power Lunch, real estate and crypto, how one of the largest private real estate companies in America is getting into Bitcoin. We will talk to Rick Caruso and a guy with an amazing first name, Tyler Winklevoss, about their new partnership right after this.
Okay, let's take a look here at the demo series here that they're preparing Palantir here for Tuesday. So this could be a swing trade. I would sell on Monday. I wouldn't wait for Tuesday's presentation. Okay, that's odd. That one says April 14th. This one, registration is closing on Tuesday, April 13th. So it is, I am right. So it is Wednesday, April 14th. It's a week from today. If you want to see this, you can register now and reserve your spot to watch it live. So that's what's going on with Palantir. Pretty cool video, little teaser. Not much going on there, just some nice high quality production. So yeah, Palantir, nice little trade there. Short-term trade. So we can see Qs here pulling back now. It rallied based on the Fed minutes. Very dovish, nothing too significant or new. And I'm not sure if the markets, I don't know if that type of news is getting old. I don't know how the markets are going to react overall in the long term. But this is definitely dovish news. Right now, it's trading back down at 332. So let's take a look at some SPACs and see what they are doing. Everything's pulling back. So we might see some continuation, a downturn here. We'll have to wait and see to see how the rest of the week develops. But yeah, it's going to be, this is not, let's take a look at the Qs. This is not something I was looking for. I was looking for this to hold up a little bit here. if we sell off and go back down, it's going to be very bearish sentiment here. And let's see what the big large cap companies are doing here. We pull up Apple. Okay, and let's get some news here. Let's see what's going on.
Hour. The White House is expanding COVID-19 vaccine access to all federally qualified community health centers nationwide. These are centers which serve communities hit the hardest by the coronavirus. COVID-19 advisor Andy Slavitt made the announcement and says that the health center program is essential to ensuring equity in vaccine distribution. France's largest stadium, Stade de France, where soccer's World Cup final was once hosted, has now been turned into a COVID-19 vaccination site. Lines of people, as you can see there, were snaked around the concourse waiting for their turn as the country seeks to catch up on vaccinations, with just about 13% of its population having received at least one dose. And how about this one? A 104-year-old woman in Colombia has now beaten COVID for a second time. Doctors in Tunja, Colombia say that the woman first contracted and recovered from the virus last June, but then back in February, after being vaccinated, she was diagnosed for a second time and hospitalized. Carmen Hernandez received cheers from hospital staff as she was discharged. Tyler, that is a strong woman there.
That is resilience, Rahel.
Yes, it is. Glad to see she's doing good.
President Biden delivering some remarks on his American jobs plan. And let's get it over to Kayla Tausche in Washington for the top details. Hi, Kayla.
Hi, Tyler. In a roughly 20-minute speech, President Biden defended the breadth of the more than $2 trillion in spending in the American jobs plan, saying that it's just simply not rational that infrastructure only comprises highways and bridges, and used this definition of what he sees as infrastructure. He said infrastructure is what the working class needs to build a better life. It's about meeting the needs of a nation. He said he's also willing to meet Republicans halfway if they are willing to negotiate, and he's also willing to be flexible on the corporate tax rate, which the plan proposes to raise to 28% from 21%. He said he's open to ideas for how to pay for the plan, so long as it fits the singular criteria of not raising taxes on individuals making less than $400,000. When asked by Kristen Welker of NBC News whether a potential outcome where he would need to pass this package along party lines, just like he did with his COVID stimulus package, means he would have failed on his promise to deliver bipartisanship, President Biden offered this interesting anecdote. He said he would have been willing to compromise with Republicans on the American Rescue Plan, but when they proposed a package of just $600 billion and refused to move an inch, that is when he decided to go it alone and move forward with the $1.9 trillion plan as is. But he said he would have been prepared to compromise, but they didn't move an inch. Tyler?
All right, Kayla, thank you very much. Kayla Tausche reporting. The cryptocurrency market hitting $2 trillion in total value for the first time this week. Bitcoin, that's the largest digital currency, rallying more than 90% this year alone. And now one of the largest privately held real estate companies in the U.S., Caruso, is getting in on the cryptocurrency craze with a significant investment in Bitcoin through a partnership with the crypto exchange Gemini. Let's bring in the businessman Rick Caruso, as well as Gemini CEO and co-founder Tyler Winklevoss. Welcome to both of you. Rick, what is the appeal here of not only making an investment in Bitcoin, but also offering to be paid rent from commercial and residential tenants in Bitcoin?
Well, hello, Tyler. And Tyler, listen, this is a really exciting announcement that we're making. First of all, we believe that cryptocurrency is here to stay. We believe that Bitcoin is a right investment for us. It's part of our treasury management. And so we've allocated a percentage of what would normally go into the capital markets into Bitcoin. And we use Gemini as our platform in order to be able to execute that. What's equally exciting is that there's applications that Gemini are doing, the Winklevosses are doing, that will literally be a game changer in the retail experience for consumers. And I have always benefited from partnering with the most innovative, the most thought-forward people. And Cameron and Tyler are ahead of the curve on this. So our consumers are going to benefit mightily from this. And let me just say one more thing. When this pandemic is over, and it will be over, Consumers are going to want to re-engage. People are going to want to be back out. They're going to want a sense of community, and they're going to want to be enrichment in their lives. But some behaviors are going to change. And the companies that win their loyalty are going to be the companies that anticipate those changes and meet the consumer where they are. And that's what Gemini is helping us do. And we're very excited about it.
Tyler, it's Tyler, and welcome.
That's right.
Rick refers to game-changing things that could change the whole retail landscape and experience. What's he talking about?
Well, I think that cryptocurrency is going to have to be part of any 21st century experience, whether consumers shop and earn crypto back in rewards with the Gemini credit card, or they can spend cryptocurrency to buy things, or even NFTs to commemorate moments or authenticate or provenance of goods. Cryptocurrency is going to be a part of any 21st century retail and real estate experience.
Hey, Tyler, this is Frank. Don't know you. My name's not Tyler, but I feel like I know you from the movie. Seriously, I really do. Rick, my question's for you. How do you deal with the volatility of Bitcoin and other cryptocurrencies? Familiar with real estate and retail, you're going to get paid. Are you going to immediately turn that into cash? How do you deal with the potential that someone giving you the equivalent of $1,000 one day might only be $500 the next day?
Well, part of that is why we have the relationship with Gemini. They're going to help advise us on that. And obviously, the market is going to be unpredictable. No different than the market is somewhat unpredictable now. But Bitcoin has had a very good long run, and we believe in it. We spent a lot of time with Gemini and their teams thinking about this. But I also want to just add on the consumer experience side that Tyler talked about. Listen, let me just give you one example. There are billions and billions of dollars of reward points that none of us ever get back, right? Whether it's travel or whatever the case is. And we have our own loyalty program. In our loyalty program, what I envision in working with Gemini and the Winklevosses is you will earn coin. You will earn a cryptocurrency. You could use that cryptocurrency on the blockchain then to spend at our properties, check into our resort. When you live with us, pay your rent. We create this whole ecosystem because shopping is a commodity. And the only way to create value and loyalty is to overlay an experience on it and reduce friction. And that's part of the reinvention that we're going through with Gemini. And they have just been so forward thinking with our team. It's not about the next year or 5 years. It's actually about what we're looking forward to the next decade.
Tyler, one of the things that has eluded me, or I have a hard time getting my head around, is if I want to use my cryptocurrency as to buy something or to redeem a reward or something like that, mightn't there be, it's an asset, mightn't there be a tax liability associated with that? And then how will you, as a platform for exchange and accounting and custodianship, how will you report that tax obligation to me at the end of the year? In other words, if I've gotten paid in Bitcoin at 50,000 and I'm spending it at 80,000, there's a tax liability there, right?
Yeah, so we actually support and issue our own stablecoin. There's like a dollar. It's called the Gemini dollar. So you don't have to spend necessarily Bitcoin. You can spend dollars on the blockchain. Gemini has extensive reporting for transactions that users can download into a PDF or another file and use for their tax reporting. So we make it really easy to follow for consumers and users to follow all of the tax situations that they need to.
That's interesting. Because you really need a solution to that. Quick final question, Rick. They're going to tell me to wrap here. The governor has said June 15th, full reopening of California. Does it go far enough? Is it soon enough?
I don't know if it's soon enough. Probably not soon enough. A lot of small businesses are still impacted. Businesses bounce back very strongly. We're happy to see it. And I think people are still being safe. And we should continue to be safe, but we got to get out there and start enjoying life again.
Gentlemen, thank you both very much. We appreciate it. It's interesting. Good to see you again, Rick. And Tyler Winklevoss.
Good seeing you, Tyler.
Thank you very much for your time.
Thanks for having us, guys.
You bet, guys.
Thanks, Tyler. Tyler and Tyler.
Yeah. Yeah.
Saying Tyler's like a drinking game.
Yeah. How many times?
Anybody watching it? It's like 17 shots.
Tyler was said there.
All right, still ahead. Too close to the sun. Sunrun getting a big upgrade today, but solar stocks getting crushed this year. Our traders will discuss next.
All right, I prepared some charts while they were talking. So this is just overlapping the SPAC ETF with the NASDAQ, with the Dow Jones, and with the S&P 500. S&P 500 here is in blue. The Dow Jones is in yellow. The NASDAQ is in teal. And the SPAC ETF is in orange. I'm not exactly sure why this chart's not loading it all the way across here. But yeah, the SPAC ETF actually has been pretty much flatline here. And this is just based on today's performance. So we see here the NASDAQ outperforming. Actually, this is the S&P 500 outperforming today overall as far as percentages go. We see now the Dow Jones lagging a little bit. And we're seeing very little volatility right now on the SPACs. Very flat. We're not seeing major big moves or down moves across the SPACs right now. If we take a look at 5 days, this is what it looks like 1 week from today. So we'll see. We're seeing here the Dow Jones slightly lagging now. And then we look at 1 month. The major indices are clearly outperforming here. And this is 6 months. This is a chart that I had up on my previous video. So we see in the 6 months, we're still seeing some good buying opportunity here. Although the Qs and S&P 500 are rallying, and that looks favorable right now to invest. You're pretty much buying at peaks. And I do like some of the larger caps and trade them with options and spreads just to make it more affordable. But it's too late in my book. And if they continue to rally, I think that's fine. I'll continue to stick to SPACs for now. So Qs here, pulling back here. It's hitting my 10 period moving average here. This is a 5-minute chart on the Qs. So it did pull back. It was a little concerning. I thought we were going to see a complete reversal. And it's holding strong here at this level. Let's take a look at some CCIV. According to the SPAC ETF, everything's pretty much flat. So, okay, CCIV, big price action here. After the Fed news came out, we went up a little bit to 23.50, went back down to 23, and now we're at 23.18. It's sticking around here, my 10 period moving average here on the 5-minute chart. So, not much to expect. We're going to see right now in the last hour if we get some nice movement here in power hour. So let's see. Let's look at Wish here. Oh, I have to type it over here. Wish here doing a whole lot of nothing. Looks like it's stabilizing. It hit new lows right now at 1440. So we'll take a look at that. Let's take a look at SoFi, IPOE. This is another one I have in my long-term investment portfolio. SoFi at $17. Let's look at the dailies. Again, just like the SPAC ETF was showing us, doing a whole lot of nothing, pretty much flat here. So this is a good time to start. Here, let me pause this before we go forward. This is a good time, again, to start considering some of these SPACs. This one hit a high of $28.26. It's currently right now at $17. Great one. Another one is Skills. Skills is another one I like. Wow, going down at $18. This is one of Kathy Wood's, one of her SPACs that she's been buying into heavily. And also, now that we're in the realm of, let's take a look at GNOG, Golden Nugget, in the realm of, I guess, gambling or betting. GNOG here with a nice move. I had some positive news yesterday. Nice big rally here, trading at 1559. Hit a low of 1222, which is amazing. Opportunity here. Hit 1220s twice. Rallies back up, comes back down, going back up. And it's hit a high of $27.18. I think analysts give this a price target of $26 1 year out, which can very much happen by the end of this year. So Golden Nugget, another banger there. So let's take a look at what they're saying here in the news.
Nearly 4%, even after RBC Capital Markets initiated coverage on the name with an outperform rating and an $81 price target. This as other solar stocks, they cool off with the reopening trade heating up. Invesco's popular tan solar ETF now down nearly 30% from its January highs. Katie Stockton of Fairlead Strategies and Quint Tatro of Jewel Financial are your Trading Nation team today. Katie, we're going to start with you. RBC's price target's about a 50% increase from where Sunrun is trading at right now. What's your take?
Well, the solar stocks have really been under pressure along with growth stocks more broadly speaking. We actually had a short recommendation out on Enphase, which is the largest holding of the TAN ETF, but we have since recommended covering that position. The reason being we have an intermediate term oversold reading having returned with that correction that we've seen for TAN. It was down at one point, I think, about 36% from its highs, and yet it did not reverse the long-term uptrend. So we're seeing some stabilization on the back of that intermediate term oversold reading, nicely above the rising 200-day moving average, close to some support in the mid-80s for TAN. And I think this is a nice staging ground for a potential relief rally. The stock or the ETF had already been up nearly 500% off that COVID low from last year. So a retracement like this is healthy in our opinion and something that can contribute to the long-term uptrend.
Quint, that TAN ETF down 30% since January, but still up over 200% for the year. What's your recommendation?
Yeah, Frank, we're in some of the solars, and I got to tell you, it's not been all that hot, no pun intended. But I like the analyst call. I think it's a bold call. We don't own the specific name. I think that investors can't fall asleep on these names down here. It's easy to do with underperformance, but I think there's some value to be found. Our favorite name in the group is First Solar. We view this company almost like a utility stock. I think it's like a solar utility play. The company has a tangible book value of about $52 a share, $16 in cash, almost no debt, and right now trading around 25 times forward while growing those earnings over the next several years around 30%. So I think there's some value to be found here. Look, we need traders. We need a momentum. That's true for growth, as Katie said. It's true for solar. But don't fall asleep on these names. I think they'll shine again.
All right, Katie and Quint, thanks for joining me. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Tyler?
Up next, Frank, taking stock with teens. How are Zoomers? I'm supposed to look over here now, huh?
Okay. I think we're both supposed to look over here.
Oh, don't be moving.
Tyler, we're never here together.
We're here to here. Look at us, both in the same shot.
And my name's not Tyler. You got to keep it straight. I'm not Tyler.
How are teens spending their free time and now their money? This might come as a huge surprise, but here's a hint. It involves shopping and TV. We'll tell you all about it when Power Lunch returns.
Tyler, you got a teenager. You could have probably just done this.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
If you're
Major League Baseball, it's going to crush a lot of people who I think this could have changed their lives economically.
No, I agree with you totally, Charles. And you have to look at how the tone was set here with this example in regards to what happened in Georgia, which, by the way, has election laws to uphold the integrity of our election system. But you have the tone set by President Biden injecting race and Jim Crow into this issue. He is lying to black voters. Even the Washington Post gave him 4 Pinocchios because the man is flat out lying about what happened in Georgia. I hope people will take the time to do their own research to really see what the laws say.
So, and this is what I'm wondering, because to your point, over the weekend, a lot of liberal periodicals and outlets all kind of said, okay, it's not Jim Crow. They questioned the timing of it. Anything they could. You've got to believe that he speaks to Jim Clyburn, right? Congressman Clyburn actually propelled Biden into the White House. You think who's telling him it's okay to keep using this term? He used it again yesterday. It's completely misleading, and I think it's insulting.
I totally agree. It is insulting. And look.
Just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
All right, welcome back. Teen spending might be rising again as Gen Z consumers, they clamor to dress up, get out, and socialize. I think we all are. Well, Piper Sandler today releasing its spring report, taking stock with teens, highlighting the key trends and which companies are benefiting. CNBC.com reporter Lauren Thomas is here to help us break it all down. Hey, Lauren.
Hey, thanks for having me, Frank.
Of course, of course. All right, first topic. What are the top apparel brands with consumers under 23 years old, also known as Gen Z?
Sure. Well, I think just to start and kind of set the stage, I mean, we're all really looking for green shoots, and teens are really giving us some signs of optimism and reasons to be optimistic about this recovery, particularly within the apparel space. Females are really driving the rebound here. Female teens, their wallet share that they devote toward clothing is actually the highest it's been since 2013, again, according to this Piper Sandler survey. Now, looking at all teens and their favorite apparel brands, Nike remains the top choice within both the clothing sector and for footwear. Nike is clearly a dominant player here. I think that hits on some of the trends that we've seen during the pandemic, this trend toward and move toward athleisure wear, loungewear, sneakers, more comfortable clothing, all the time. And Nike is still dominant within that space. American Eagle, it was second on the list. Lululemon actually moved up to the 4th spot. That was its highest position on this list. Urban Outfitters and Abercrombie & Fitch's Hollister division were on the list as well. So some classic teen brands that you might think of. But now 2 interesting things that I want to call out here. One is this online Chinese fashion marketplace called Shein. It ranked number 8 on the list, the first time that it's ever cracked the top 10. That's largely driven to this rise of TikTok influencers and whatnot are really seeing a surge in popularity of Shein. And consignment and thrift stores also ranked number 10, and that was up from 23 just a year ago. So a huge increase with the consignment trend among teens.
Yeah, Lauren, I really wanted to ask you about that. Nike's my favorite brand too, but I don't quite understand this consignment and thrift trend. Is there any reason why younger people are gravitating towards clothing that someone else has worn?
Totally. So secondhand marketplaces, think Poshmark, ThreadUp, both of those actually just recently went public. The RealReal is public as well. There's another platform called Depop. They're really popular with younger consumers. When you ask Gen Z teens what they care about, they often think sustainability. That ranks pretty high on the list. So this idea of putting clothes back into the life cycle, not throwing as much apparel away each year. About 47% of teens say that they've bought something on a secondhand marketplace. 55% of teens say they've sold something. So it's also another way for them to make cash. Maybe they don't have a job. So really, with the growth of these platforms online, we're really seeing a transition from teens into that space as well.
Yeah, that sneaker resale market, that's definitely hot. Get that part. All right, lastly, aside from shopping, how else are teens spending their time besides shopping?
Yeah, so if they're not on Amazon, if they're not on Shein, teens are, of course, they're on social media. Teens are spending about 12 hours per week on average on social media apps. Snapchat is still the most popular among teens. Instagram is up there as well. TikTok, one to watch. They actually stole some market share in this survey by Piper Sandler from both Snapchat and Instagram this time around. And they're watching videos as well. About 37% of the time that teens are spending watching content on the internet or online, that's Netflix. Netflix is taking about 37% of that. YouTube as well. Cable TV fell on the list. So it appears that more teens are either cutting the cord or their parents are.
All right, Lauren Thomas from CNBC.com. We appreciate it. Thank you very much. Tyler.
All right, more Power Lunch ahead. And don't forget, you can always watch and listen to us live on the go, on the app, TikTok, whatever, Snap. We'll be right back.
I might be a Gen Zer. I like Nike. I spend a lot of time on Netflix.
Yeah.
So we have SOS here holding. I know this is one that's been all over Reddit and has a lot of attention. It's a Chinese company. I'm not crazy about it. Short interest did go down already. Maybe they already got squeezed. The short volume ratio is around 9%, I believe. So this is something that clearly to me looked like a complete pump, being a Chinese stock. And they're just on Reddit clearly saying they had a whole team behind this stock. So I'm not going to step into this one. But if we do see here the overall market, we have 4,200 decliners, 2,100 advancers. So this has a potential for a squeeze here to go higher. this power hour, if not maybe setting up for tomorrow. But overall, we have more decliners than advancers, and we're really seeing large cap tech here outperforming the market. So SOS, another one. I'm not crazy about it. If you're in it, hope you're making some money. But yeah, I'm not stepping into this one. Let's see here what else we have. CCIV here holding at 23. Let's look at Palantir. This is pretty silent. 23. Palantir at 23 as well. So we have both CCIV and Palantir at $23 a share. Another one I like to look at is PSTH, Pershing Square. A lot of delays in Pershing Square, but holding here at 25. Pershing Square was supposed to announce their merger, and they continue to have delays. So I don't know what's going on. Maybe they weren't happy with the options of the companies they were going to merge with, or maybe all the companies they had in mind already merged with other companies. I don't know, or delaying IPOs due to market conditions. It's hard to say here. So what's another good one here that we can look at? I have a watch list here. Let's look at Sensonics. That's one that I traded with options, but it didn't work out for me. Sensonics let's look at the dailies here. Sensonics at 255, hit a high 5. Yeah, pulling back. So let's see what's going on with the news.
Really across.
Let's look at some power lunch.
Highs right now in technology, Google, food, McDonald's, housing, Pulte, financials, BlackRock, Pharma, Medtronic, the retailer, Stanley Tucci, Black & Decker, and Semis Lam Research. It really shows you the breadth of this upward draft in stocks, Frank.
Yeah, absolutely. Pulte Group and Waste Management, too, that make perfect sense. So many people are buying new homes, and when you buy a new home, you got to throw some stuff out. You might throw some stuff out before you even move, so it makes perfect sense.
Interesting conversation on Georgia, right?
Yeah, I wanted to recap that with you. What was your take on that? One thing that both the governor and the Secretary of State have both not said is that there was fraud. So a lot of questions about the motivation.
I think it was an overreaction on the part of businesses to be so critical of the new Georgia law. Interesting point of view. Anyhow, we leave it there. Much more to say, of course. Thanks for watching Power Lunch. Frank, always great to be with you.
Great to be here with you, Tyler, and the other Tyler.
And two Tylers. How do you like that? You can never have too many Tylers. Closing bell starts right now.
Gents, thanks so much. Welcome to the Closing Bell. I'm Wilfred Frost, along with Sarah Eisen. Stocks trading in a very tight range again today, with the Dow and S&P 500 still near record highs as we head into the final hour of trade. Let's have a look at what's driving the action. Fed minutes just released last hour show Fed officials expect it will be some time before it starts tightening policy. JP Morgan's CEO Jamie Dimon out with his shareholder letter today, saying he's optimistic about the U.S. economy as it begins to reopen and vaccines get distributed. We'll have more on that letter coming up. And some of the reopening plays like cruises and restaurants are rallying in today's session. We have 59 minutes left of the session. Sarah, sort of mixed on the headline indices as we stand.
S&P up about 0.1%. Welcome back, Wilfred. We've got a great lineup of guests coming your way. Fed Governor Lael Brainerd will be here to discuss her outlook for the economy and how strong data could impact rate policy. That's an exclusive. Plus, an exclusive interview with the Deputy Treasury Secretary, brand new Wally Adeyemo, his first since being sworn into the position. We'll break down the Treasury's new report on the taxes that would pay for the Biden infrastructure plan. Plus, we've also got an exclusive interview with the Carnival CEO, Arnold Donald, making news today. The company saying that bookings are accelerating. We'll see if the CDC lets them sail. We'll focus in, though, first on the big stories we are watching. 1 hour left of trade. Mike Santoli tracking the market action. Wilfred has some highlights from Jamie Dimon's shareholder letter. But, Mike, start us off with what you're seeing in the major averages.
Yeah, Sarah, lower volumes, lower volatility, but really just hanging around here at the all-time high. So, it's contending with a little bit of short-term overbought conditions, but also supported, of course, by great expectations for this economic boom we all see in front of us. Keep pointing out, we're just sort of stretching this path that we've been on since especially October 30th. Now, what you've seen here is we've had a little pullback. You get back to an all-time high, flatten out. all-time high, flatten out. That's not that unusual to be a little bit kind of a stair-step action right here. Also been a bit more of a defensive, less speculative tone out there. Take a look at very large stocks versus very small stocks. Been a very pronounced change in tone. You had small cap outperformance for most of the way from August up till recently. This is since March 15th. This is the extra large XLG, the largest stocks in the S&P 500 in the index, as well as the microcap index. That's a pretty vast spread between these two size factors. Also, small cap Russell 2000 has done nothing in 2 months, consolidating, digesting. That's probably the bullish, interpretation of what's going on. There probably is a little bit of a sentiment headwind, a positioning headwind. People are kind of all in, very well exposed to the market. Take a look at the CBOE equity put call ratio. This goes back 3 years. What you see is we keep bumping along these lows at extreme low levels. That means nobody's really betting on downside or hedging. A lot of people are speculating on upside, just curling up slightly right here. Sometimes that can mean you're in for some kind of a pullback. These little mini spikes were when we had these 4% pullbacks in recent months that then culminated, and these were the bottoms of those pullbacks. So, it's obviously operating within a pretty narrow range, but this is one of the issues we have periodically. Everyone kind of gets on board on the bullish side. Everyone sees why, based on the macro and the fundamentals. Sometimes the market just has to work through those sentiment headwinds, guys.
Under the surface, it's another strong day for FANG and technology. Communication services and infotech, best performing sectors. If you look at where the strength is, Amazon, Apple, Microsoft, Facebook, NVIDIA, Google, Intel, the usual suspects. Is this trade back?
Well, here's the thing. We think of them as the usual suspects because they were the clear leaders for so long, especially going into last summer. But they're many of those stocks are well below their all-time highs. And they also represent, to some degree, a defensive kind of characteristic in the market, meaning reliable growth, reliable earnings. So I don't know about that trade being back in terms of the leadership group, but it's definitely participating, and it's probably net positive that the market, instead of just kind of falling apart altogether when things get overbought, money migrates into the more stable areas. It's allowing the index through this rotation to stay supported. And we obviously don't know if it's going to last, but so far it's acting reasonably well.
Not Tesla, though, down 2.5%.
No, that's right. Very conspicuous.
Mike, thank you. We'll see you soon. JP Morgan Chief Jamie Dimon releasing his annual shareholder letter today, a 66-page behemoth loaded with thoughts on everything, from the recovery to the banking industry to America's standing in the world. Wilfred, what are the big takeaways?
Behemoth was Sarah's word, not mine, Mr. Dimon, if you're watching. Anyway, Jamie Dimon expecting the U.S. economy to boom in the next few years, despite ultimately being skeptical of quantitative easing because, quote, the money simply made a round trip, ended up back as deposits at the Fed, not as loans, end quote. But the boom is coming because of 3 reasons. 1, fiscal spending. Quote, the fiscal deficit is pure and simple, giving various individuals and institutions money to spend, which they will spend over time. 2, the size of the packages. He says, quote, the QE and deficit spending response to the COVID-19 pandemic is of a completely different magnitude and without some of the offsetting drags that trailed the Great Recession. And 3, he says that the starting points matter. We're not coming into this with banks and companies needing to deleverage. Thus, he concludes, quote, it's not unreasonable to expect that an increase in inflation will not be just temporary, end quote. He's hoping for a Goldilocks scenario, but the 2 big risks for the economy and the market are that potential increase in inflation and, secondly, the possibility that new COVID variants are resistant to the vaccine. But despite all of the overall short-term optimism, he was pretty downbeat about the long-term challenges that America faces. He said, quote, America has faced tough times before, but in each case, America's might and resiliency strengthened our position in the world. This time might be different, end quote. He focused on that section a lot on division, bureaucracy, topics like that. In what I describe as this sort of manifesto for America sections of those 60 pages, which, as ever, Sarah, in his newsletter actually dominates compared to the JP Morgan company specific stuff. But so much we could have picked out of those 60 pages.
Is he more bullish than usual, Wilfred, when it comes to the near-term outlook? The fact that we're going to have a boom that could last for a few years, I mean, did that stand out to you?
Definitely. I mean, I've been reading these for 6 years. I think in terms of the short-term cyclical outlook, this was as bullish as I've heard him. Though, as I said at the end there, the frankness on individual points pretty clear. Also on the frankness on the sort of long-term challenges facing America pretty clear. Some other little interesting points as well, which have definitely grabbed attention. One was the scale of the threat from other sorts of financial companies. And he has some great charts in there about the size of the shadow banking system by assets compared to the banking system and the extraordinary growth there, and by the fintech companies in terms of market cap, for example, versus the banking system now, and that threat is incredibly real. Of course, he says they are ready for it, but listed a number of the companies like Amazon, Apple, Facebook, Google, and Walmart as their strengths are extraordinary, he says. The platforms, the data they have is endless, and the threat, therefore, coming forward, significant. But I guess shareholders would probably be encouraged that he's talking so openly about that and how he feels they're prepared for those threats.
Mike, Jamie Dimon, always good to hear from him. More than a spokesman for JP Morgan or the banking industry, really for corporate America these days, and sounding a very positive message, but with some real long-term threats. What stood out to you?
Yeah, I mean, I think, first of all, he has a lot of company, and looking at everything driving the expectations for a very rapid snapback in the economy that is not likely just to be very temporary. Just the extraordinary nature of this cycle, really, a crash and then overwhelming response to the crash, plus the pent-up savings and spending power, which are in all these JP Morgan accounts, stuffed with deposits, credit card charge-off rates plunging to record lows. He's absolutely right. This is not a lot of leverage in the system outside the government level, really. And so I think that it's a consensus view, but also one that maybe we just aren't used to seeing high nominal GDP growth that's going to last for several quarters. And so I think you do have to be alert for the idea that we might not be prepared for some of the side effects. It could be inflation, but I think I don't know if we're going to believe that until we see it right up front.
Mike, I just guess the final point here in terms of like the company specifics. Yes, banks are holding on to their gains today, and JP Morgan's up 1.3%. But the other offset of this extraordinary cyclical recovery to come is how much is that already priced in, not just on the banking stocks, but broader cyclical stocks, as we've been discussing at length for the last couple of weeks.
Yeah, absolutely. I mean, I think that's really what the overall market has been contending with, this sense that we've been pricing this in for months. Doesn't mean it's complete, but it's pretty far along. And things don't look particularly cheap, even if earnings estimates keep going up. They look, cyclical stocks look cheaper than perhaps some of the hyper-growth stocks. But yeah, I mean, I think that's the push-pull within the market. Also, second year after you have one of these major market lows tends to calm down in terms of the pace of gains. All that is probably at work right now. Wouldn't be surprising, I keep saying, wouldn't be surprising to see a period of time where Main Street outperforms Wall Street to give back from when Wall Street last year really did much better than Main Street did.
That was the theme of the year. Mike, thank you. Yeah. We've got a market flash now on Twitter. Julia Boorstin with the details. Julia.
Well, Twitter shares taking a bump higher on reports that Twitter said on a press call that eventually people may be able to complete shopping transactions on Twitter. Also saying that it's in the early stages of thinking about how to monetize the audio chat feature Spaces that it currently has been rolling out. Now, Twitter telling me that this fits with what the company said back at its Analyst Day in February, that it's exploring commerce as an opportunity for Twitter. They also talked back then about different ways they could diversify away from their reliance on advertising, including potentially a subscription service for content creators. Guys, back over to you.
It's been working for Instagram in terms of shopping. Julia, thank you. Julia Boorstin. After the break, voting member of the Federal Reserve, Lael Brainerd, joins us to discuss the newly released Fed minutes and how she's thinking about rate policy and America's economic recovery. You're watching Closing Bell on CNBC. Dow is just down 24 points.
So we're seeing a big inflow in big tech, large cap. We see Twitter here on a nice rally, a 3.4% rally here today. Very nice here. Let's look at Snapchat. Snapchat just crushing it here on a 7% move here at 60, showing a V-shaped recovery here from previous lower highs here. Just going straight back up, parabolic. Let's look at some semiconductors here. Let's look at Intel. Let's see what Intel's doing. Again, showing some decent strength, nothing too exciting. How about Micron, MU? Pretty flat. How about some AMD? Let's see what AMD is doing here. AMD trying to come back up from its lows. I'm looking at Mike here. Limit order 100 shares at 23. Yes, very nice. Very nice limit order at 23. So we see AMD pulling back from 100, basically 99.23, pulling all the way back down to around 75, and now we're at 82. So we're seeing some upticking here on large cap stocks. AMD slightly lagging here. Let's look at SFTW. This is Black Skies. This is one that I have a pretty large position on a separate account here. I have some warrants on this one. Warrants are cheap on this, so if you like warrants, consider SFTW. Warrants are around, let me see, they're around $1.60. Let me double check if I can pull the warrants here. SFTW. Yes, these are the warrants. The warrants right now for SFTW is at $1.60. When it hit that rally, it almost went to $5 potentially. If we see a rally here on SPACs and we see Black Skies here get some love in the next few weeks, months, and we see it rally back up, these can potentially make you a 4 to 5x return here. So I have some of these warrants. I had the WPF. If you were following my channel, I had a WPF here, the William Foley Tresemme SPAC. This is a merger with Ally. I like the company, and I actually swapped my warrants to SFTW. SFTW is a lot more volatile stock, and I feel like that has the potential to make a bigger move sooner. So I had this one, WPF warrants. I swapped them for the SFTW. All right, we're back at the news. Closing bell.
The latest Fed minutes out just in the last hour show the central bank isn't planning to tighten monetary policy anytime soon, despite seeing a recent uptick in economic activity. The Fed expects to keep an accommodative stance until it achieves its goals of maximum employment and inflation around 2%. Joining us now for a CNBC exclusive, a Closing Bell exclusive, Federal Reserve Governor Lael Brainard. Welcome back to the show, Governor Brainard. Great to have you, especially always on this IMF World Bank meeting week.
Nice to be here.
So is that the right takeaway from the minutes, Governor Brainard, that there's going to be some time, you say, before you achieve your goals? In other words, no hints of tapering, no hints of normalization? Is that what we should take away?
Well, I think what you see there is what you've been hearing from members of the FOMC, which is the outlook has brightened considerably on the back of the vaccinations and substantial fiscal support, that additional savings that consumers have accumulated. So brighter outlook. But of course, our monetary policy forward guidance is premised on outcomes, not the outlook. And so it is going to be some time before both employment and inflation have achieved the kinds of outcomes that are in that forward guidance.
How long is some time for you in terms of your own forecasts?
Well, I think what's really important here, Sarah, is that because we are basing our forward guidance on actual realized outcomes on inflation, actual realized outcomes on employment, that is going to depend on how rapidly we see improvement. So what you see in the SEP, the forecast, is considerably better outcomes both on growth as well as on employment and inflation. But again, that's an outlook. We're going to have to actually see that in the data. When you look at the data, we are still far from our maximum employment goal. For instance, you take into account people who have dropped out of the labor force, as well as the decline in employment. And, we're over 9 million jobs short of where we were pre-COVID. If you take into account that reduction in the participation rate the unemployment rate looks more like 9% than it does like the headline unemployment rate. So, in that sense, we've got some distance to go before those outcomes are achieved.
And inflation is the other piece of this, of course, and the big debate right now in the market. Chair Powell has said that he expects it to be transitory, along with some of the other Fed members. Wondering what your call is on that as far as the upcoming rise in inflation that we're expecting.
Yeah, well, there are some unique factors this year that could be expected to push inflation above 2% this year. Obviously, there are those base effects that are going to drop out. So we'll see inflation on a 12-month basis briefly jumping up in April and May. But then later in the year, as the economy opens back up and we see that pent-up consumption coming into the services sector and more broadly in the economy, we could expect to see some bottlenecks in supply chains that also might contribute to some increase in inflation for a period of time. But it's really important to recognize that those are transitory, and following those transitory pressures associated with reopening, it's more likely that the entrenched inflation dynamics that we've seen for well over a decade will take over, then that there will be a sustained surge in inflation for a persistent period.
I wanted to ask Governor Brainerd about some of the things, the headline points from Jamie Dimon's annual letter today. And one quote in particular stood out on QE, saying, quote, "Much of the money supply made a round trip because of new liquidity rules. It ended up back as deposits at the Fed, not as loans." And essentially his argument, while bullish on the outlook for the economy because of other factors like the fiscal stimulus, was that QE doesn't really do anything. What's your take on that?
Well, I don't want to speak specifically to any particular letter, but let me just say more broadly, if you look at financial conditions, they are very accommodative today, which is very much in line with the forward guidance on our asset purchases and our rate policy as well. And they are clearly supporting a stronger recovery. If you look at the data that's out today on consumer credit, also really strong there. So I would say that, we are seeing the kinds of financial conditions broadly across the financial markets that are very consistent with supporting the recovery, with supporting the flow of credit to businesses and to households. And I think that is very much in line with the goals of our overall monetary policy stance.
Speaking of financial conditions, Governor Brainerd, we've seen Treasury yields move up lately. Do you welcome the rise in long-term yields as a sign of growth and coming inflation, or do you want that to stop?
So I certainly have been monitoring movements in Treasury yields closely. And, I would be concerned to see disorderly conditions like we saw on February 25th, or movements in yields that might jeopardize achievement of our goals. And of course, in that regard, I'm going to be particularly attentive to changes in policy-sensitive intermediate yields and their relationship to the forward guidance that we're providing. But I think what we see in evidence, for instance, from the New York desk surveys of market participants and primary dealers, is that, in fact, market participants do really understand the new forward guidance, the new monetary policy framework that we have in place. And they seem to sort of have expectations around the conditions, both for inflation and employment, at the time of liftoff that seem broadly consistent with that. So, I am going to continue monitoring closely. But I would say financial conditions overall remain very accommodative and supportive of the recovery. And that's true, of course, also when you look at the prices of riskier assets.
Not to overly focus on this morning's letter, but there was another theme in it which raised the question, at least, of whether traditional banks are much more regulated than some of their newer rivals, either the shadow banking system or newer fintech companies, which clearly are now of a very significant size, bigger than a lot of the banks. What's your view on that going forward as to whether fintech, for example, needs to face slightly more even set of regulations as the bigger traditional banks do?
Well, we are seeing transformation, rapid transformation of the payment system associated with digitalization. And that has big implications, certainly for us at the Federal Reserve, for the financial system more broadly. I do think it's important that payments providers have important guardrails around them. Certainly consumers have come to expect certain protections from their bank accounts that are embedded in regulations, and they may be surprised to find that they don't have some of those same protections when it comes to some of the newer players. So certainly, I do take a broad view of the financial system, the payment system, and we do want to make sure that there are similar guardrails, that we don't see risks to the payment system, we don't see risks to financial stability coming from some of these new players. That we have over somewhere in the system, there's an ability to oversee those and ensure that the appropriate guardrails are in place.
Finally, Governor Brainerd, just because of your international experience at Treasury and some of your relationships there, wanted to get your take on the global outlook, which the IMF told us this week is going to be multi-speed and a lot of divergences. Europe is behind us. Emerging markets are sharply behind Europe. It all depends on paces of vaccinations and mutations and fiscal and monetary stimulus. Does that factor into your thinking on policymaking, and what do you see ahead for the global economy?
Absolutely. The international environment is very important consideration for us as we look at both at our financial system and our economy more generally, because there are big interactions, spillovers, and spillbacks there. In terms of what we're seeing, I think the divergence theme is apt. Obviously, just like in the U.S., the economic outlook is heavily dependent abroad on getting control of the virus and making sure that vaccinations are widespread. And for a whole variety of reasons, different countries are moving at different speeds on that. Different countries also have different levels of fiscal support. And so, you are seeing the U.S. recovery looking like it's really going to pick up steam and perhaps faster than some of its international peers. That means that we're likely to see some leakages of that strong domestic demand abroad, which might lead to some slippage between both, U.S. domestic demand and U.S. resource utilization. But I think, more broadly, financial conditions here in the U.S. are also important abroad. And, there are some sensitivity there. So we are going to be as transparent as we possibly can about our reaction function. We think we've been as clear as we can be, and we're going to continue to communicating as clearly as we possibly can as those outcomes that we were talking about earlier really start to show progress.
Well, part of it is in interviews like this, so we certainly appreciate it. Lael Brainerd, Federal Reserve Governor, thank you.
Thank you.
We have, I don't have a live clock in front of me. There we go. 35 minutes left of the session.
Now you see what I have to do every
and
day.
At the moment, I know, and it's the first day back doing this. I used to have a laptop there last time. I'll get it for tomorrow. Anyway, the Dow is down, 10 basis points or so. A little bit of positive gains for the S&P. NASDAQ slightly low. Russell, the laggard, down 1.5%. Up next, new comments from the CEO of Exxon about the role oil and gas will play in a lower carbon society. Plus, T-Mobile going all in on 5G. We'll talk to the company's CEO in an exclusive interview about that effort coming up. We're back in a couple minutes.
You know that tech stock we talked about? I picked up 500 shares.
You getting at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
These days, you have to keep everything moving and reinvent the wheel.
We got a huge increase in orders.
With a hybrid,
I think we can handle that.
you can do both.
I'll be right in.
That's why manufacturers are going hybrid with IBM. With Watson on a hybrid cloud, factories can use AI to automate the little things so they can focus on the next big thing. Businesses that want to innovate at scale are going with a smarter hybrid cloud using the technology and expertise
Nice work, guys.
of IBM.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200 or much more if you're trading big bucks.
Go Henry. It's the debit card and smart app designed to simplify family life. You set them chores and allowances, they start earning. They spend, you get notified. They set goals and start building savings habits. Plus, they get to customize their cards. Get started now.
Stop hodling high fees. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Hold it in your brokerage account or your IRA. No wallet, no keys.
A time frame that is really unprecedented.
Do you take responsibility for that?
115 sustained wins.
Everybody is back in the game. Where do we go?
What do you make of this
How
report?
does the moment become a sustained movement?
I've reported from here during 3 different presidential administrations.
Should we be lifting the tariffs?
Because words matter.
Welcome back. Let's have a look at some individual market movers. UBS upgrading retailers Abercrombie & Fitch and L Brands today. The firm is bullish on the denim trend, saying these companies will fare well in the reopening. Those stocks are both higher nicely, 7% for Abercrombie. Exxon's CEO outlining the company's new ESG efforts and push towards a low-carbon future. The CEO was on CNBC earlier today, and here's some of the highlights.
If you look at what the role that oil and gas plays today in the energy systems around the world, how it supports economic growth, how it supports people's standards of living, and look at the opportunity space for people's standards of living to rise, particularly in developing countries, there's going to be a continuing demand as society works to transition to a lower carbon society.
Exxon doing well along with the rest of the energy space today. Time now for a CNBC News update with Rahel Solomon. Rahel.
Hi, Sarah. Hello, everyone. A judge has ordered the release of a former Dallas police officer. He was arrested on murder charges for allegedly ordering 2 killings. Prosecutors say they don't have enough evidence to move forward with the case against Brian Reiser. Target is pledging to spend more than $2 billion at Black-owned businesses in less than 4 years. Target also says that it's adding new resources to help Black-owned suppliers scale up production. Kentucky Governor Andy Beshear has signed into law a bipartisan election bill that includes 3 days of early and post-in voting. See why Democrats and Republicans were able to agree on this voting bill on the news with Shepard Smith. And Nike may face legal action from the U.S. Postal Service. At issue here is an upcoming version of the Air Force sneaker that clearly takes design cues from a priority mail package. The Postal Service criticizes Nike for aggressively protecting its own intellectual property while allegedly leveraging another brand for its own gain. Sarah, what's interesting here is there's not actually a logo on the sneaker. So the logo is not really at the center of the issue, but it clearly takes a hint from a shipping label. So we'll have to see how that shakes out.
I don't know. It's not obvious to me. Is it to you?
You don't think so?
I guess.
I mean, it's the blue, the red. It looks like a shipping package
I didn't see the
to
back.
me.
Now I see it. Now I see the stamp. Oh, okay.
So, but there's no logo. So
right. So it might be hard to hold up in court.
Exactly.
Rahel, thank you.
Yeah.
Still ahead on the show, we will dive into the economic policy and the tax proposals to pay for the Biden administration's jobs plan when we speak with Deputy Treasury Secretary Wally Adeyemo. Plus, Carnival seeing a surge in bookings. We'll break down the state of the cruise industry with CEO Arnold Donald. And as we had to break a check for you on bonds, we haven't been seeing a surge in bond yields. In fact, quite the opposite lately. The 10-year note yield at 167. So a little bit of selling today at the back end. The 30-year 235. Nothing as extreme as we saw in the past few weeks. 10-year got as high as 178. We'll be right back.
All right. One of my subscribers messaged me about Kathy Wood, in my opinion, on the recent text from Elon Musk. What do you think of the unusual high ratio of S&P 500 market cap to GDP? So this is the Warren Buffett indicator. Basically, we're at extremely high, all-time record highs. The ratio is all-time highs, GDP to S&P 500, which is extremely bearish. This is a bad signal. And this is what Kathy Wood replied. GDP statistics evolved during the industrial age and do not seem to be keeping up with digital age. Thanks to productivity, real GDP growth probably is higher and inflation lower than reported, suggesting that the quality of earnings has increased significantly. So what she's basically saying is the metrics they used to use, like Warren Buffett, Warren Buffett used to use, that when he created this GDP ratio to S&P 500 and the way that is measured is outdated because of technology and automation and AI and computing power and semiconductors and so on and so forth and innovation. So she's saying that the actual real numbers is not what we see because of the way they're using those metrics is outdated. So she goes on a rant. She's not concerned about this Warren Buffett indicator. She's relentless. She can care less. And her investing strategy is long-term. So she can care less if we see a 20 or 40% correction here. Yeah, in the short term, it'll hurt, but she has a bigger picture, 5, 10, 20-year outlook. So she goes on here and she continues to explain the technologically enabled innovation evolving today is dwarfing that during any other period in history. So we've never seen this before. It is creating good deflation and explosive demand. Battery technology is a good example. In ARK Invest view, EVs will scale 15 to 20 fold in the next 5 years. So she's seeing a big explosion in EVs. So I like this outlook, especially for us investors in CCIV. This is extremely positive news. If deflation limits the long-term treasury yield to low single digits, the discount factor used to present value future cash flows probably will fall to surprisingly low levels during the next few years, a massive head fake in the face of higher inflation expectations. The seeds for the explosion in innovation today were planted during the tech and telecom bubble in the late 90s. Back then, investors chased the dream before the tech was ready and while costs were too high. After gestating for 20 to 30 years, the dream has turned into reality. But given the reactions to ARK Invest research, many investors seem skeptical or reticent. This wall of worry is healthy. I would prefer to invest in the face of fear than exuberance. So she's basically saying people with this kind of fear and people talking about inflation and interest rates, that's when she likes to invest, when everybody's fearful. And she thinks that technology surpasses these metrics, therefore the numbers are wrong. So it's tough to say. It's tough to say where we go from here. I think this is something that's interesting, just to see another point of view. I mean, you talk to 10 experts, you'll talk to Buffett, you'll talk to Kathy Wood, you'll talk to Ray Dalio, and they'll all give you their perspective. So they all have their own point of view, and they're all very successful. So the beauty of this game, there's different ways to skin the cat and to make some money. So I think overall, what I see from the big funds and the different perspectives, overall, they all win because they have a long-term objective. And I think we need to focus on a longevity instead of short-term gains. And based on my trading experience, that always wins. And it's not as, enticing or as, favorable as short-term high gains, which is very difficult to do in a long-term period. So, yeah, interesting article. Thanks for bringing it up, Chris. I appreciate it. Yeah, this is very interesting. This was from 2 days ago.
protect our competitive edge.
Parents, meet Go Henry, the allowance tool that helps kids learn the value of money.
Okay, we're still here at commercials. So if we take a look at APXT, this is one company I like. This is AvePoint, one of the biggest servicers of Microsoft. AvePoint right now trading at 11.32. I bought this back. I bought it months ago when it was first announced. I made some nice returns on it. I sold it off. Overall, great SPAC here, trading at $11. This is a giveaway. Also, let's take a look at PaySafe, trading at $14. Pretty good levels. So we have a lot of discounts here. What's the problem? The buying problem. The buying power is the problem. So most of us are already invested or already have our positions. So basically, we just need to add to these if you're able to. If not, right now we're just weathering the storm. These are great companies. I believe that it will take some time for them to come back up, but I do believe by this summer we'll see these companies back up at reasonable price levels, and we'll be very happy with our portfolios. IPOE at $17. Okay, let's go to the closing bell here. Power Hour not doing much.
The beginning of its 5G for all era, including free 5G phone upgrades and the launch of T-Mobile Home Internet. The stock has outperformed competitors AT&T and Verizon over the last year, rallying by some 71% since the lows last March. I'm delighted to say that joining us now in a Closing Bell exclusive is T-Mobile CEO Mike Sievert. Mike, good to see you.
Hi, Wilfred. Thanks for having me.
So much in today's announcement. I only touched on a couple of parts of it, but the thing I wanted to start on, which interests me the most of all, is the T-Mobile Home announcement. Tell us more about that and exactly the kind of timing when it will launch and your initial expectation of how many subscribers you're hoping to grab.
Well, it's just a huge day for the connectivity of the more than 60 million American households in rural areas and smaller markets. They've never had real competition. In fact, 40% of rural Americans today have no choice when it comes to their home broadband. And we're bringing choice to 30 million homes today with our broad launch of T-Mobile Home Broadband, brought to you by 5G technology, which, as you know, we've rapidly rolled across this country to an extent that far exceeds anybody else in our space.
What are we talking about in terms of pricing options and data download numbers, given that clearly at the home, people often consume quite a lot of data?
Well, this is the real deal. And as you know, the Un-carrier likes simplicity. So we're just making it one simple nationwide price of $60 a month that includes the taxes, the fees, the gotchas the other guys have, the devices. And so it's really great. One monthly payment of $60.00, and customers are going to average 100 megabits per second. And so it's really a huge day because so many people in rural America and smaller towns have been left behind with no real competition. Even on the wireless side, our market share is only in the low teens in smaller towns and rural areas compared to 35% in the big cities. So we have massive room to run here while doing some real good for the connectivity of Americans.
Mike, on the free phones, I don't know, the stock's down today. Are we to take this as a sign that the competition is only increasing between you and Verizon and AT&T?
No, our stock's been moving around. It's, not that far off the all-time highs. But, this is a competitive market. And T-Mobile loves competition, and we've always thrived in it. And I'll tell you one thing. The market is returning in wireless. For the last year, there's been a pretty muted switching environment as people haven't been wanting to come to retail where so much switching happens in wireless. And that's coming back. And so we feel like we're really well positioned in 2021 as the switching market is now back. And it's a great opportunity for us as America gets back to shopping and switching and considering whether they've got the right wireless provider.
Mike, you mentioned the attraction of getting your connectivity wirelessly in certain rural areas. What about in key cities? In 5 years' time, what percentage of the population will have cancelled their fixed line connection to have just one connection with a company like yours for both their mobile phone and home phone, albeit delivered via 5G?
Well, that's a fascinating part of today's news. You know, we're covering 30 million American households today. That makes us one of the largest ISPs in the country by geographic area today on our national launch day. And we've got a lot of room to run because there are a lot more households than that. 10 million of those are in rural areas. That means 20 million aren't. So we're bringing competition right into the suburbs and the cities starting today. People want lower prices. They want simplicity. You know, they want the portability of being able to have a subscription that's based on their person and not on their building. And we're bringing them competition and choice, what we promised we would do when we created this new company by merging with Sprint last year.
Mike, I'm curious your take on the Biden administration's new infrastructure plan, which does call for expanding broadband to people in rural communities that don't have it, as you've been talking about, and investment in 5G. Does it go enough if the goal ultimately is to compete with China and get ahead of them on this type of infrastructure? Do you think the Biden plan achieves that?
That is one of the... That's certainly one of the goals, Sarah. And I'll tell you, one thing that we've seen that Democrats and Republicans agree on is the importance of connecting rural Americans in this country and bridging the digital divide and making sure no one's left behind. And if there's something that this last year has shown during the pandemic, it's just how important that is. Home connectivity is incredibly important for economic vitality in smaller cities. And so, you know, we've seen a lot of alignment on this from both sides of the aisle. But look, on the legislation, we'll see what the president works out with Congress. But today, with our big announcement, today is a big day for the connectivity of rural Americans, and we're not waiting.
So do you support the plan, even with higher taxes?
Well, we'll see what the plan turns out to be, but we're ready to jump in. If there's a plan that allows us to catalyze efforts and it's a practical plan, we're ready to jump in and make sure that any effort that helps us reach rural Americans with 5G connectivity, if it helps bridge the digital divide in this country and it's a practical plan, you know, we're ready to go execute against it if it comes.
Mike Sievert, thank you very much for joining us on a slew of big announcements today.
Great to see you.
We appreciate it. So,
I had to pause it. I can't be playing that music. YouTube strikes me for it. Okay, still playing. Okay. So let's take a look at some ticker symbols. So CCIV here hold at 2270. We had another sell-off here. Let's take a look at some other ticker symbols here. This is EXPC. Let me put it over here. EXPC, this is another Kathy Wood. This is another Kathy Wood. It's back here at 1038. Chris, yeah, Chris. Yeah, it's just so finicky to, you know, you have to be careful with YouTube and songs playing for sure. So EXPC here, EV tall play. So it's trading at 1038. Another good SPAC here. Let's take a look at the warrants. Maybe you want to do a little warrant play here. Warrants trading at 240, so slightly higher. Warrants of EXPC trading at 240. You can see here it hit a high of $6. And this could be a good play. ARK Invest is behind this ticker symbol. And this could be another good play for a warrant play. I'm currently in SFTW. And I have these warrants here. They're now trading at $1.58. I bought them, I believe, like $1.85, so I'm a little under. But the beauty with warrants, they're not like options. These do not expire. So this is the lovely part. You get the leverage, but they don't expire. So I like warrants in specific occasions. So I'm holding the SFTW warrants. This is Black Skies. Let's see here what Palantir is doing right now at the moment. Palantir here holding at 23. Let's take a look at ChargePoint. This was another high flyer. It's totally, completely melted away, sold off to $19, and it immediately bounced back to about $32. Huge move here. About a $12 move here in a matter of like 5 days. Now pulled back at 28.55, trying to recoup here. Let's take a look at Blink here. Another power play here for the Biden stocks. We're looking at, it's trading at 40.62. Let's take a look at Plug Power. Ticker symbol plug, PLUG. Plug Power at 31.83. Another great opportunity here for a long-term Biden energy play here at 31.78. So we're seeing a bit of a market sell-off here. Let's take a look at the volatility index. The VIX at 1740 here. We're seeing a slight rise here on the VIX. We potentially can go lower here. So let's see what the news has to say.
In the trading day, we are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Josh Brown back from Ritholtz Wealth Management. Welcome, Josh. We'll kick it off with the broader market. Major averages are losing some steam here into the close. The S&P 500 still hanging on to its gains just barely. It is near a record high level. The Dow flipping positive, being helped out right now by JP Morgan, Microsoft, and Apple, not so much by Boeing, Disney, and Home Depot. Mike, if you look at the action on the major averages, it's flat, right? And we've seen this for the last few days. Treasury yields also not doing a whole lot, which you could argue means a lot is priced in because we have seen some fantastic data on jobs, on services, on job openings this week, where normally you would expect the market to surge.
Yeah, we've gone a long way. I mean, 9% year to date in the S&P 500. We're just over 3 months into it. You've slowed down a little bit. The market's a little bit kind of listless, tired, whatever you want to call it, but it's not really giving up very much territory on the index level just yet. Below the surface, there's a little bit of weakness. There's just a little bit of, I think, digestion of this move. I'm very willing to have two things be true at once. The fundamentals are great, and the market figured a lot of it out, and a lot of people are pretty fully exposed to the market at this point. So, you know, we're just looking for perhaps the next source of energy, whether that comes by way of a pullback and getting people shaken out, or just maybe sideways for a little bit, or some other, you know, jolt of news. I think that's the condition we're in. But volumes really, really have evaporated here.
Josh, you've been looking at sort of the percentage of companies that are kind of stretched to the upside at the moment. What's that telling you?
Well, I guess I wouldn't use the term stretched, but all right, so taking a step back, you look at the NASDAQ 100. So we said, all right, it's the end for large cap growth. These stocks are done. Nobody wants anything to do with them. Now you have 85% of the NASDAQ 100 back above the 200-day, which is phenomenal, like in any market environment. And that number was under 60% just a couple of weeks ago. So that entire narrative you can now throw in the garbage. Take a look at Facebook, Microsoft, Google making new highs. Amazon's coming back. It's up like 75 points today. Heavy drip in Amazon. Apple's busting loose out of a prior range. NVIDIA and some of the large cap chip names are running. So that whole narrative is gone. And now large cap growth, specifically tech communications, helping the averages at least maintain where they've gotten to. And then you look at the S&P. 95% of S&P 500 stocks are now above their 200-day moving average. And most of those 200-day MAs are rising 200-day MAs. And that is insane in terms of participation in a bull market. Now, depending on what and who you are, there are two ways to interpret that. One way is to say it's Goldilocks. It's as good as it gets. Take some off the table. It can't be this good for too long. I think that's reasonable. But another way to look at that is, really, that's the type of market you want to be short? Like, seriously? What's wrong with you almost? So that's kind of where I am, is right in the middle. I can understand the push and pull at these levels, but my instinct tells me this thing's got higher to go, even if we have to correct in the short term. So that's where I am emotionally, Wilf.
It's good to hear, Josh. It's good to hear. Often
about,
and always
Sarah?
optimistic.
Your intensity.
JP Morgan CEO Jamie Dimon releasing his annual shareholder letter today. We spoke about it in the first hour. I just wanted to circle back to his comments on work from home, implications for both real estate companies and perhaps costs for banks. Diamond talks about only a small percentage, 10% of employees working from home in full in the long term. So not a major shift like some tech companies, but says many will work under a new hybrid model. Thus, he says, quote, remote work will change how we manage our real estate. We will quickly move to a more open seating arrangement. As a result, for every 100 employees, we may need seats for only 60 on average. This will significantly reduce our need for real estate. And this guy's really going to help their costs, but perhaps more importantly, for a company with only 10%, as they say, fully working from home, to lower real estate needs by 40%. It's got to be a little bit of a concern for real estate companies. And Mike, we'll see, of course, if that's already priced in or not. The other headline, of course, he did confirm they will complete building their rebuild of their main Midtown New York building and just frankly move more people into it because it's going to have capacity for 14,000 regardless.
Yeah, I mean, they obviously were caught in a unique position, obviously planning and building a new headquarters. But obviously, Josh, like Jamie Dimon, is the CEO of a financial services firm. And I wonder what he thinks about thinking about real estate needs from this point on.
He'll release it in his shareholder letter.
That's a hell of a cost,
66
Mike.
pages we need, Josh.
Yeah, well, we are lighting a pile of money, tens of thousands of dollars every month on fire. And that's very uncomfortable for me as the CEO. But what choice do I have? I'm in year 3 of a 10-year lease on Bryant Park. My office is gorgeous. My view is even better. I have the Salesforce Tower, catty corner to us. And directly across, I just read today they're opening a Shake Shack. So I don't want to pick up stakes and abandon the space. And even if I wanted to, legally I can't. So we're paying tenant. And our plan is to turn this vulnerability that we have with like this really highfalutin space in Manhattan into a positive. So you will see us probably convert the conference room into a studio, start doing a lot more media from there, and have like guests and people hanging out and showing up because clients aren't. We have now become accustomed to having all of our client meetings on Zoom. They like it better, easier for us. And I don't think it's going to go back. So I think I'm not unique. I'm certainly not the size of JP Morgan, but there are many firms like mine where we will have employees day to day in our offices, just not everyone. And it won't seem weird at all. And I'll probably be in Manhattan 2 days a week. And the other 3 days a week, I'll be out here where I live. And I think that's like the way things are going to be. And no one's really going to mind it too much. The only people that are going to be hurt by this are commercial real estate brokers and companies like SL Green that won't even feel the impact immediately. It'll be in 3 years and 4 years when they go to re-sign existing tenants and those tenants disappear on them or take a third of the amount of square foot or whatever it is. So I never thought I would like mall REITs better than Manhattan office REITs. Like for the last 20 years, I never thought that would happen. That's where I am today.
SL Green has had a good run, actually. It's climbed up. It's up 50% in the last year. Really come off its lows. But you would stay away?
They've been able to refinance. They've been able to refinance everything. And you could say the same for Vornado Trust. I don't think the real impact has hit these companies yet. And I understand it's Manhattan, it's LA. People will figure out what to do with the space. It's, you know, these things always come back. It's cyclical. I understand that argument. I don't think that argument has ever been put through this virtualization moment that we've been put through. And I don't think it comes back to the extent that it was. And it's amazing that this is the way it is, but this is the way it is.
Apple explaining why it is giving users new tools to protect their privacy. Julia Borston with the details. Julia.
Sarah, Apple's new operating system will allow its users to opt out of ad targeting, which Facebook has said will hurt small businesses' ability to target consumers with ads. Now, users will see a prompt like this one asking if they want to allow an app such as Facebook to track their activity across all the other companies' apps and websites that they visit. Now, Apple also now requires apps to disclose exactly what type of data they are collecting. Apple warning that the average app has 6 trackers embedded and that data brokers collect, sell, and disclose personal information to third parties, including location access and even the photos you have on your phone. Guys, back over to you.
Oh, sorry, Julia. Didn't realize it was me. Julia Borston, thank you very much for that. We're going to get to Courtney Reagan next, who's having a look at why 90s fashion trends are hot right now. Court.
Oh gosh, this reminds me of being a teen. When asked about their top fashion trends in Piper Sandler's biannual teen survey, they stan mom jeans and ripped jeans. And remember grunge? Well, baggy pants and flannels, those are hot again too. Crop tops as well. Oh, those baby tees. Sarah, remember those from the 90s? Well, for shoes, Nike reigns supreme, 10 years running. Jordans, though, called out as well. Michael Jordan, of course, very key in 90s sports. Doc Martens and Birkenstocks, hot too. Hair trends, so 90s. Curtain bangs, middle parts, curly hair, perms for the males, and butterfly hair clips. Piper Sandler says that contour brands is a great way to play those denim trends. Revolve, that's a good one for the apparel trends. And Ulta is tops for teens and the way to play hair and makeup trends if you're looking for stock ideas off some of these survey results. Back over to you guys.
Perms for the males. Was that a 90s trend? More of a sort of 70s, no?
Well, curly hair in general was big in the 90s. I let my hair go curly in the 90s.
Okay, we have 2 more minutes here until the close. We have 2 more minutes. CCIV here holding at 22.89. So we saw a lot of blood here towards the end. SPACs holding, and we saw markets go up and then pull back. So we have a lot of mixed sentiment here. This is the Qs here. We look at the 5-minute. Huge volatile moves here towards the end, the last hour. Fed news came out. It rallied, had a massive sell-off touching these lows. Now trying to save here right before the close. So a lot of mixed signals. A lot of mixed signals here. Let's take a look at the VIX. Now the VIX is down to 1723. This is a great sign here. We saw it rally up at the open, and now it's at 1726, cooling off here. So we want to see this next target. I want to see the VIX below 17. That's going to be extremely bullish here. We take a look at the longer term VIX. VIX likes to be around $10 normal market conditions. So we're $7 away. Let's take a look at the S&P 500 here. S&P 500 at all-time highs here. Basically just a dollar away from all-time high, 75 cents. And I do see S&P 500 here pulling back to my 10-day moving average. We're about to see, let's see the Dow Jones here, industrial. Dow Jones, again, slightly almost at all-time highs. And I think we're going to see some of these stocks take a breather here. So that pretty much, that is the closing bell there. Let's take a look at one last time at CCIV. CCIV here closed at 22.80. So that does it for today. After hours is up 5 cents. It's at 22.85. So that pretty much does it. Thank you guys for joining the live stream to see the FOMC meeting, the Fed minutes. And tomorrow, I believe some jobless data is going to come out tomorrow. So that's going to be interesting to see. So maybe markets are waiting for that as well. And we're going to see what happens going forward in the next few weeks. Mike, yeah, thumbs up. Thanks for joining the stream. It's sluggish right now, guys. CCIV is definitely trading within my channels. This is what I expected. Let me pull my other chart that I had charted since the very beginning. If you were following my channel, you saw that I start calling out CCIV when it was announced at $13. We had this massive rally, and these were my price targets. And this is the area I saw CCIV trading. This bump here was a surprise. Over 26.50 was a surprise for me. I didn't think we would go past that in the short term. It completely psyched me out and fooled me. Now we're here, and now we're at a channel between 20 and 26. And unfortunately, I think we're going to stay in this channel for a while. This is my feeling here. We need to see the overall market cool off, and then we need to see the SPACs get some momentum going back up again. Possibly end of this month we'll see CCIV above 30, but let's pull up the calendar here. We have about 3 more weeks here. So this week, not expecting much. Next week, again, not expecting much. We'll see about in 3 to 4 weeks what we see here. So this is a seller's market, option seller's market. Covered costs will work out. Selling puts possibly. And Mike, need to see production, Lucid Air on the streets. Yes. I have some dates, catalysts out there that will happen most likely Q4 of this year. They just released a new video as well. So I'm going to make a video right now on that. Lucid just released, it's just Peter Rawlinson driving in New York. It's a nice 4-minute video. Just really hype. Nothing new, exciting, not a catalyst that's going to move the needle. But I do like that Lucid continues to produce product to hype their car. And as an investor, that's what I want to see. I want to see a company that is proactive in their manufacturing, production, and also proactive in marketing. I want to see articles. I want to see them trying. I want to see them just continue to push content. Even though if it's redundant, I want to see them trying just to show some tenacity and motivation. So yeah, I'm going to release that video. I'm going to edit that video now after this close. And I should be releasing it this afternoon. Nothing obviously that moved the markets, but another more Lucid content for sure. I appreciate you guys coming out. I have a lot of links down on the description. If you guys want to check out some of the apps or Patreon and Discord, feel free to check that out. And I'll catch you guys on the next one.